Yo, yo, what's up? What's up, everybody? We're going to be starting here in about. All right, folks, just want to dip in here really quick, let you guys know we're going to be starting in 40 minutes with Chief Market Strategist Matt Maley. He's a Chief Market Strategist at Miller Tabak, private equity firm. A lot of you guys have seen him on Bloomberg TV, Yahoo Finance, CNBC Asia, all these things. But he's going to be here with us today. He is currently with the chat members right now. He does have a live trading room with Benzinga and he's members right now, but he will be here with us in about 40 minutes. Just make sure you're here. We get started because we do have a great for about 40 minutes or so, and stick around. You're gonna love this. What's up? What's up, everybody? I don't know if you can hear me. I'm trying to use my AirPods for now. It looks like I had some issues with this microphone thing. So if you can hear me with this, I think we're good to go for the day. So just keep in mind, we're going to be starting here in about 20 minutes with Chief Market Strategist at Miller Tabak, Matt Maley, top dog over there. 40 years in the game, baby. That's all you need to know. 40 years doing this thing nonstop. Director of trading at Merrill Lynch for like 10 years or something like that. Um, heavy trader as well on Solomon Brothers, early 70s, late 70s, early 80s. Before computers were in the game, my friend, all right? Before this whole technology thing came into play. A real OG, Matt Maley, chief market strategist. A lot of you guys already seen him on CNBC, Bloomberg TV, Yahoo Finance. Just keep in mind, he's going to be here with us today. Today, we're going to talk about the markets, trade setups, trade ideas, education. There's also, let me look at the title here. And also, we're going to ride the volatility, which really is what he does every single day. And yes, you heard it right. 3-digit gains. This is a normal thing for Matt. This guy lives on the fast lane. Matt Maley lives on the fast lane, I'll tell you that. So, folks, stick around 18 minutes. We're going to get started. Doesn't matter if the mic broke or the headphones broke. We are still going to make this session work. All right. We have a great Monday coming up. There's a lot of things that we got to make sure we adjust according to our portfolios, strategies. That's why Matt's here. So make sure you're here. 17 minutes, 18 minutes. Let's go. All right. Don't miss it. We're going to have a great session for you. All right, folks, 14 minutes. We're going to get this thing started with Chief Market Strategist Matt Maley. Just wanted to drop in here because I'm getting a bunch of emails from you guys. Yes, Matt Maley does have a live trading room. That is correct with Benzinga. And we dropped the link in the chat. If you do want to tune in, when it comes to Matt Maley's live trades, he's literally there all day trading the cues, buying calls, buying puts. I mean, as far as I know, he's very welcoming to corrections. It doesn't matter if the market is going up or down, choppy markets, it doesn't matter. Matt Maley's been doing this for 40 years, so he's pretty much checked out the game, and that's what he does, right? So he's a chief market strategist, but he has a live trading room with the Benzinga crew here, and you can join as well. You are welcome to join. The link is in the chat. I'm just getting a bunch of emails. Yes, there's a 7-day money back guarantee. You can join anytime. Don't worry. There's a free laptop. Don't worry about that. We're going to talk about that later. But yeah, folks, we're going to start here in about 30 minutes, 13 minutes actually. But yeah, I'm just getting a bunch of emails about this whole live trading thing with Matt. So just keep that in mind. Yes, he does have a live trading room. We will touch on that later, but let's try to focus on the lesson here. We'll be starting in about 13 minutes. Thank you. Yo, what's up, everybody? We're going to be starting here in like 5 minutes, something like that, here with Matt Maley, Chief Market Strategist at Miller Tayback. We got some OGs in the chat. Uh, Shelly, what's going on? What's going on, hon? Miss you too. Look, there's no cat here today. He is here, but he's behind the scenes. Lost Marbro is like, yo, I'm so fucking pumped. Nice. I love it. We're going to show that comment on the YouTube. We're going to approve that here. So, yes, this is live. This is live, boys. Ladies and gentlemen, yes, we're going to be here live. We're going to chop it down. Everything that's happening in the Ukraine, the impacts on the market, Putin's comments, like actual market fundamentals as well. So you cannot miss this session. Trust me on this. You cannot miss this. I do not care if you have an appointment, with your girlfriend or your whatever it is, or you got to make sure you make time for this. 5 minutes, we're going to start with Matt Maley, and we're going to make sure that we talk about the markets, trade ideas, education, how to trade the volatility. We're going to show you some nice trade ideas as well from the chat room, because that's where Matt literally hangs around all day, whipping out trades left and right. So we got going to Arizona. What's up, man? If I remember well, man, you're a truck driver, man. So a shout out to all the truck drivers out there, man, that literally bring us, all the things we need, right? All the things we need to eat and all that stuff. So shout out. I can picture you already being like, yes, sir. So shout out to you, man. Shout out to Alex Robs in the house. Anderson, what's going on, man? Aries, shout out to you. Elrich Daniel, what's going on? Gary H. Plitt, Pat Sanka, Ray, what's going on? Joseph Brown. So yeah, guys, we're gonna be here live with Matt Maley. Do not miss the session. Trust me on this. We got a special thing planned for you. We will be talking about a whole bunch of things. So don't miss out. 5 minutes. I'm talking with Matt on the back right now. We're talking about a couple things there, some trade idea setups, a couple things there for you guys, but you can't miss this. Trust me on that. We'll start in 5 minutes, so just stick around. All right, folks, we got like 1 minute left here um, to get this thing started. All right. All right, ladies and gentlemen, welcome to the session we have here for you today. Theophanous on the YouTube chat. Great job, you guys. These sessions are valuable. Yes, today we're gonna chop it down like no other day, man. Trust me. This is when you want this kind of thing, right? This is when you want us to do these kind of videos and this kind of stuff, right? Whenever things are popping. But like just generally what's going on in the markets, right? There's a lot of things going on, the Russia stuff, inflation, Ukraine, all that stuff, it's impacted the stock market. And in the chat room with Matt Maley, we're able to profit on both sides of the chain. So it's either buying calls or buying puts. But yeah, guys, my name is Rodrigo. I'm going to be here with you today. We'll be here with Matt Maley. He's a chief market strategist at Miller Tabak. It's a private equity firm. He was a director of trading there at Merrill Lynch as well. He managed two of the biggest accounts in the world, BlackRock and Fidelity, when he was there in his tenure. And prior to that, he was at Salomon Brothers, which unless you are, unless you've been around for a while, you don't know what that is. But yeah, I mean, Salomon Brothers was like the hottest firm in the late 70s and 80s. It was like the Warren Buffett of the times per se, like the Kathy Wood, of the time. So that's where Matt Maley, and a lot of great giants came from Salomon Brothers, one of them being Matt Maley. And he is going to be here with us today. So we'll definitely be chopping down the markets, all that kind of stuff. He was in the chat with the members, but yeah, that's what we're going to be doing here. By the end of this session, you will have a much better understanding, not just of how to profit from the volatility, right? But I mean, literally, because that's literally what Matt Maley does, but how he's able to literally do, 3-digit gains literally on these type of whipsaw movements in the markets when you time them correctly. So in the chat, folks, go ahead. Go ahead and let me know when you guys are ready to start. Okay. Shout out. Okay, I see you. I see you there, Mr. Arizona. What's going on, sir? Okay, JP is ready. JP, you never miss one of these sessions. So shout out to all the folks that never miss this stuff, because you are totally right. This is like valuable, being able to have like Matt Maley here. I absolutely get it. Jack Mock, what's up, man? But yeah, let me know in the chat. You guys seem ready to start. Omakula, JP's ready, Anderson's ready. Let's go ahead and bring here Mr. Matt Maley. Whenever you're ready, Matt, go ahead and give me a check there on your end. I think we're good to go here, Mr. Matt.
How you doing there, Rodrigo?
How we doing? Matt Maley's in the house, sir. Hey, Mr. Matt. Well, I mean, I'm doing good, but these markets, man, really, I've been looking forward to the session, especially because it seems like everything kind of wraps up by Sunday. But yeah, so number one, I've been looking at all the trades and all that stuff in the chat room, and it's just been insane, back to back, all these weekly puts and calls, and I love the entries. I've been literally on these trades for like 2 months, but yeah, I mean, what do you think about the market right now, Matt? Considering everything that's happening out there, what are you guys doing in the chat room? All that sort of stuff. How are you positioning, considering all the stuff that's happening right now?
Yeah, well, it's obviously this situation in Russia is in Russia and Ukraine has exacerbated problems that were already creeping into the market. I mean, we know that long before this, or say long before, but many weeks before this invasion of Ukraine took place, oil prices were already moving up in a significant way, and inflation across many different areas was rising, and the Fed, of course, was pulling in its horns, cutting back, tapering back on their QE programs and such. So the stock market was already down. Now this is just exacerbating everything. And one of the things that is interesting is that sometimes you have geopolitical issues can exacerbate a tough situation in the marketplace. But it's somewhat separate. This time it's just pouring salt directly onto the wound, because inflation was the problem. Of course, higher oil prices and higher food prices, that's just going to make inflation worse. So it's created this, this incredible pickup in volatility, which has been, great for us in the chat room. We've been able to, and the big thing, of course, is be able to benefit and profit on both sides, whether it be the on the long side, the buy side, or on the bearish side of things through put options and inverse ETFs. And one of the great things now that we haven't had in the past for individual investors is we have the tools now to be able to take advantage of both upside and downside moves, and in a significant way. In the past, it really only been options. If you really wanted to leverage yourself a little bit, you could go out and buy, use a leveraged account and buy extra shares. That can be very risky, but in the options market, at least what you're risking, your downside risk. But they were all the options only expired quarterly, and we didn't have any of these ETFs. And nowadays we have options that expire weekly on big and medium cap names. We have them that expire 3 times a week on the index ETFs. So you don't have to pay that huge time premium to try to take advantage of these moves. This is something that institutions have been able to do for a long time. Individuals haven't. And then, of course, we have ETFs, leveraged ETFs, and inverse ETFs. So again, so you can take advantage of both ways, and that's what we've been able to do. And I think that the market right now, overall, I mean, what I'm hearing this weekend is not the kind of thing that's going to bode well for the markets, at least for the foreseeable future. I mean, I watched the Sunday morning political talk shows, and they concentrated on all this talk about the flies. They talk about no-fly zone. That's interesting, and whether they're going to do that or not. But they're really talking about that. Hey, let's get these planes. They moved them into Poland so that the Ukrainians can use these things.
Fighter jets, right.
I mean, they're talking about prolonging this war. They're not talking about how it's going to end this soon. So it's going to create a lot more volatility in the weeks ahead.
Well, the thing is, and I just I've been tuning into the session because just when something remember when COVID was hitting and everybody was like, okay, these are the COVID numbers. We were looking at hospitalizations, death rates. We were looking at infections. You remember back in the day, that's what mattered, right? And I feel that the market is just focusing on this Russia stuff. It's pretty serious, It's very unfortunate. We feel very bad for all these people that are suffering. Put aside what's happening into the market, Matt. But as this happens, right? I was looking into that. Putin said that these sanctions that they were putting onto them were considered an act of war. So I'm not trying to get going on either way, but if this were to happen, I'm sure you're able to profit from the volatility, but what do you think this would be able to really tank the markets big time? Is what I'm trying to ask.
Yeah, I mean, it certainly can. I mean, that the potential is there. I mean, this is very similar. It's interesting that you mentioned the COVID situation. Back then, when people are saying, "Don't worry, these pandemics really they're only short-lived. They really don't have an impact on the market. When they do, it's very, very short term, and the market always bounces back." Well, obviously, that turned out to be dead wrong. This time around, very similar. We have people saying, "Oh no, don't worry. First of all, he's not going to invade. If he does invade, it's going to be quick. Then he's just going to take over those 2 provinces, and after that, he's going to back off." None of those things have worked out right. And back in 2020, when the pandemic was going on, and everybody was saying, "Don't worry, it's not going to be a big deal." When they finally woke up to the fact, the market just got crushed. I mean, it went down 35% in 2 weeks, a couple of weeks, maybe a little bit more than that, but not much more than that. It didn't have that kind of stair-step decline because everybody realized all at once, oh my gosh, the global economy is going to shut down here. This time around, it is different because the market has come down some. But the full extent of the situation in terms of inflation and what that means, and because we have a Fed that is not piling in with massive amounts of liquidity, instead they're pulling back on that. I think it's going to create a situation where the stock market has to fall. And the other thing we have to note is that all that liquidity, that what do you call it? The historic levels of liquidity. I'm sorry.
Can you share your screen really quick, Matt, so we can go ahead and get started?
Sure. I'm sorry. Let me.
Yeah, no, but definitely keep going on there with your points. I just wanted to.
Here we go. Let me get the share screen. Bang, 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 bang. Okay. So going back to the back and what we're doing now, again, it won't go straight down like it did in 2020. Usually when the markets get hit, it's a stair-step fashion because people get short, then they want to cover. People have, hear news that, oh gosh, that gives them confidence that the situation is dying down. But right now, I mean, again, you have, we have a stock market that is coming off a very very over expensive level at 22 times earnings. Now it's about 19 and a half times earnings. That's still on the expensive side given what is going on. But the biggest thing was that when we had all that leverage, for 18 to 20 months being added to all that liquidity added to the system, because of the Fed's massive and historic stimulus program, QE program, it added all of this leverage. People had so much confidence they were going to be able to take much more risk. They added a lot of leverage to their portfolios. That helped, the supply-demand equation skew to the demand side and to push the market higher. The problem is when the situation changes and the market has to go and the market comes back down, that leverage has to be unwound. That's why we have margin calls. I mean, and that's the problem, that whenever it happens, and history shows, whenever we get massive levels of leverage in the system, margin debt and such, when it turns out, it's not a good timing tool, but when it starts to roll over, as we're seeing now, the stock market sees a significant decline. And of course, we know now based on what we're hearing from the Fed, something that we've been talking about in the chat room for months, that the Fed put is no longer, or the safety net is not just below the market; it's well below the market. And the Fed, I honestly think they're okay with it, as long as it doesn't just completely disrupt and freeze up the markets like it did during the pandemic, where that's where they really had to step to the plate, because the bond market, the credit market is completely frozen up. And when that happens, nothing gets done. And the stock market, so they had to come in. Right now, that's not happening. That's good on the one hand, but it also means that the Fed can kind of let things play out, let the market do its own thing. They don't have to step in and keep it from freezing up. And especially since this is happening in another part of the world. So this kind of volatility is going to be with us. And I just think what I'm hearing over the weekend, and I spent a lot of time reading and listening to, the experts that I respect in this area. And boy, it's fairly obvious that that Putin isn't going to pull out anytime soon. If he does, he'll be pushed out of power. I mean, he just looks so weak. If he pushes out too early, he has to do it from a level of strength. But this thing I'm hearing from the Americans, and we had retired generals and geopolitical experts, and they're all talking about, the key for this battle is going to be if the Ukrainians can get, let's say control of the airspace, but at least have some sort of an even fight going on there, because right now the Russians control it. Like, why would you talk about controlling the airspace if you think this thing's going to be over in 2 or 3 days? Okay, it's going to be with us for a while, and we're hearing more and more people say that. I mean, some people have been saying it for a little while, but now we know it's going to be the case. The thing is, though, unlike 2020 when the pandemic was going on and everybody threw in the towel all at once, we'll do what's going to happen this time around is what usually happens when we see the stock market see a significant pullback or even a bear market. But just look about the pullback we saw in 2018. It took down the S&P. I'm going to pull it up right up here. It took down the S&P just under 20%. Right, and we all remember that. It was the last time the Fed tightened. And this is what we had. Now let me get rid of some of these lines here. That there we go. Okay, now, oops, I want to go 2001. Sorry, I'm bouncing this thing around too much. And then I'm going to go 06. Okay, now put this on my computer a little bit steadier ground so you're not, your thing isn't vibrating too much. Okay, now this is what we saw. Let me get rid of some of these lines so that it's just not such a busy chart. Those are moving averages, those colored lines. I'm going to get rid of those. I'm going to get rid of the volume. You don't really care about that. But see what happened here. This is what we see, and we're already starting to see that. You see, it doesn't go down a straight line. You see a nice bounce here, and these may not look like big bounces, but they are fairly significant. And there are ones that we can take advantage of. I mean, look at this one. It's 8% bounce. Now, if you get a 8% bounce over just 2 weeks, and you're buying call options, you're going to make a lot of money. You're going to make 100%, 50%, 100%, even a couple of 100%. But you see this: a rally there, a rally there, a rally there. And the eventual sell-off, I mean, it's really at the end, the last time when people finally say, oh my God, this isn't working, I need to get out. And they start to panic a little bit. And of course, we saw that, the same thing. You say, oh my God, the financial crisis. Well, that was just a crash that took place. The market went straight down for over a year, basically a year and a half, starting in late 2007 and ending in early 2009. Well, that's not the case at all. Look at this. See, same thing. See these rallies? See these bounces along the way? Again, this one, look at this bounce. This bounce, it may not seem that big, but boom, for 15% bounce. Okay. And when the broad market bounces 15%, you get big bounces of 20, 30% in individual stocks. And of course, if those things move in a big way, the options move several 100%. So again, you think, oh my gosh, we're going to make money on the way down. And like I said, we now have the tools to do it through weekly options and index options that expire 3 times a week, and inverse ETFs and such. We can take advantage of the downside, but we also want to be able to take advantage of the bounces along the way. And we've definitely been able to do that. And I'm going to go straight to this thing that we did. Hold on 1 second. Get this down because I want to do the.
Yeah. No, we definitely appreciate you being here with us, Matt, especially at these times. I know that there's a lot of chat room members here that are showing the love in the chat. So shout out to these guys of saying I love you, Matt. But yeah, you've definitely helped the chat members and weather these times. And to be honest, this is really when you would need that community feeling. Can you imagine, Matt, just trying to enter into the markets on your own right now, at this point?
And that's the thing. I mean, one of the things that I do is that I've been doing this a long time, and I've been 40 years, and you talked a little bit about it, but just to review real quickly is that as I'm a former trader and with an institutional trader. I covered the BlackRock, which is basically the biggest hedge fund in the world, Fidelity, the biggest mutual fund in the world, and many other hedge funds and mutual funds. I talked to the trading desks of those accounts on a daily basis. Traded for them every single day. Same thing with other mutual funds, insurance companies, etc. Those are the types of things that I learned for 25 years. I learned how to do, what's important now, not what theoretically should happen down the road. So even though I'm a strategist, I have a much different background, and I don't just look at the theoretical fundamental aspects. The fundamentals are wildly important, but as I always say, the market is not always right. Despite what Wall Street tries to tell you, the market is only always right eventually. And obviously the market was dead wrong in February of 2020, early February 2020. The market's at all-time highs, and they had a pandemic staring in the face. I was pounding the table saying, yes, maybe this will be like the other pandemics, but you need to raise some serious cash here because the market is expensive. So therefore, it doesn't have a whole lot of upside anyway. So and it does have a lot of downside if this turns into be a big problem. That's what happened, and the market came down. And this is what we're doing here. I'm just going to show you what I talked about before. Before I show you some of these examples of how we're able to make money in both directions. But right here, again, I talked about it shortly. Is that back here, the leverage? See this leverage? This is margin debt. And of course, margin calls is what causes, as I say, crashes. And I'm not saying we're going to get a crash, like we saw in 1987 or something like that. But we did see kind of an elongated bear market, which, like elongated crash in 2000 and 2007. But when they really got hit hard, it's because of margin calls. Those crashes don't happen because of a bad inflation number. They don't happen because of the economy turning down. They happen for one reason and one reason only, and that's forced selling. And the forced selling doesn't come at the beginning. You don't get a margin call when your stock that you have bought on margin is down 5% or even 10%. It's when it's down 12, 15% that they get the margin calls. And then those people have to sell, just force sell. They're like, get me out. I don't care how cheap the stock is. It could be I know it's the greatest buying opportunity in the world, but it doesn't matter. I've got a margin call. I've got to sell the stock. I have no choice. And in some cases, they have a stock that they can't sell because it's too illiquid. So what do? They go into Apple Computer and sell that stock because it's the only way they can raise the money they can to meet their margin call. And these are the types of things. But this is what happened in 2000. This was off the charts. Nobody could believe that the margin debt got that high. Well, guess what? It got even higher in 2007. Higher in 2018 and higher now, just last year. But it's not the rising margin debt. It's when it rolls back over, and it's just starting to roll back over now. And so that's the thing that I really is what makes me really nervous about this market seeing a lot more volatility and probably going low over time.
Yeah, and you've been talking about this stuff way before. Number one, like all the Bike Chef is like, I signed up last week with Matt. I've already been learning and earning. Great room. Matt knows his stuff. So shout out there to Bike and Chef. He's a member of the chat. But definitely, I mean, there's just no way that you could try to figure this out, this kind of stuff out on your own. There's just too many things out there. There's too many factors out there. But
and I agree, because what you talk about in the traditional fundamentals, when we get this kind of volatility, you throw those out the window. The moves take place because headlines coming out on specific things. But if you look at the key fundamentals, which we definitely do, but also look at the technicals, especially right now, we're looking at the charts every day very, very closely. We also look at positioning. We also look at sentiment, because when too many people get one side of the boat, no matter what the intermediate term view is or long-term view is for a stock or a group or a market, if everybody's on one side of the boat, it can't go any more that way. It has to at least see a little bit of a counter trend reaction, at least for a few days. That's something I've learned over time. How many times it happened to me in the oil markets. This was a longer term call, but the oil markets in October 2020, and I was pounding the table saying, everybody hates this group. Everybody's short it. Everybody hates it. All the mutual funds under own it. All of the hedge funds are short the group, and the fundamentals are actually getting better. And the reason why I said that was that, of course, everybody was saying fossil fuels are done. And I'm like, believe me, I want them to be done immediately, but it's going to take more than a decade for that to happen. So the fundamentals are still okay for this group. Pound on the table, people tell me I was crazy. But of course, the group did rallied in an unbelievable fashion. Right now, and I'm going to show you in a few minutes why I'm not chasing the group up here. And even though I think this war is going to get worse, even though I think oil could go a little bit higher, at some point very soon we're going to see, even if it's only for a couple of days, you're going to see a dramatic drop in oil, and I'll tell you why. And so right now, I'm actually have a couple of negative bets on the energy stock, even though I love them longer term, and I'm telling people you should hold on to your positions. If you own just the common stocks, hold on to them. They're going to be great. If you want to pare back a little bit, that's fine. I think you'll be able to buy them a little bit cheaper at some point. I'm just saying, don't chase them. And more importantly, I'm going to, it's a risk, but we're going to take, I've made some negative bets in the chat room on a couple of stocks there, but we'll talk about that in a little bit. But again, it sit there and go, it's going to be very counterintuitive. And that's why the pros do so well in the marketplace, because they hear the stories about pump and dump. They pump up something on a real big story, and then, something they've already bought, shoot it up, and then they sell it to the retail customers before it gets clobbered. And but it's not just that. There're just all sorts of different issues that, let's face it. The one thing that I was asked on the chat room was like, well, interest rates are going down. Why isn't the stock market rallying? Well, yes, usually lower interest rates are positive for stocks. but not when those rates are going lower because of a flight to safety. What happens is what's the safest security of the world? U.S. Treasuries. So you go in, you buy those U.S. Treasuries, and so when the price goes up, of course, in bonds, when prices go up, yields go down. So the yield goes way down. You'd say, well, that's bullish. Well, it's not bullish, because the reason they're buying them is because they're scared to death of what's going to happen to the economy or other issues, or scared of inflation, not because of something that would create a positive atmosphere for overall stocks. And that's another thing I'll just say before I keep saying I'm going to tell you about these couple of trades we've done. But the key for the chat room, and I think some of the people have already alluded to with the comments that Rodrigo mentioned, is we're always trying to talk about why we're doing things. Now, giving you picks is great, but why? So you can learn the situation and learn these nuances and learn these situations that don't seem to make a whole lot of sense intuitively. And it's like, I mean, one of my favorite ones is the whole thing with the airlines. That airlines say, well, when oil prices go up, it's negative for airlines. Well, not always. In this case, yes, it is. But if the oil prices are going up because of really strong demand, right now they're going up because of really bad, because supply is being cut off. If demand is good, that means the economy is doing well. That means more people are going to fly. So that means that when oil prices go up, airlines also go up. But it depends on the situation. Usually that's the case more often than not, and it makes sense intuitively. Well, wait a minute. If oil prices are going up, that means their costs are going to go up. They're going to make fewer. Profits. Their profits aren't going to be as big. Well, first of all, a lot of them hedge their fuel costs. But more importantly, it's more than made up for on the demand for air travel, especially in the old days when there was a lot more business travel. But that's my point, is we're constantly talking about what are the things, why we're doing things. And there are times when I sit there and say, I'm not going to make this trade that some people are making, and the reason for it is because of this. And I readily admit, hey, this might be wrong, but just be a little careful because of this or because of that. And it just helps people learn for future reference whenever they're trading. And that's, we all have that big bucket of stocks that we have 3, 5, 10, how many years, 30-year time horizon, and we want to buy this. But for those of us who enjoy trading and have the inclination to trade a little bit more actively, you can really enhance your gains by taking advantage of the situation, especially the one that exists now, and we have the tools to do it. Now, just to go back, what we did just not this past week, but we did that again this past week, but the week before, we had this whole situation where right before the market, right before Russia did actually invade, the stock market was the stock market was really kind of ignoring it. They're kind of saying this is not going to happen. Putin's really not going to make the move. He's going to be fine taking over just these 2 small provinces. And I was saying, there's way too much, way too much complacency surrounding here. We got to get in here and buy. Now, these were the February 25 QQQ puts. The QQQ puts are the options on the NASDAQ 100 ETF. So basically the NASDAQ ETF. And the NASDAQ 100, which is the 100 biggest stocks, which are really a lot of tech stocks. But we went up. So this was we bought them on the 23rd, which was Wednesday. We bought the QQQ February 20th, $330 strike price put options. Bought them in the afternoon. And of course, the attack took the next day on Thursday, and this thing went up. These things opened almost 400% from where we bought them, almost 400%. We actually, now I did say, so and I added some up here, so my return was less than that, but it was still above 300% because my average price started moving up because I just kept adding more. I wanted a bigger position. But believe me, making 350% on more money is better than making 390% on less money. But the whole point is, before the market even opened the next day, I was on the chat room saying, we got to sell these at or right near the opening. I mean, you do not want to be and I was like, hey, this could be a much bigger deal. And these these options could go up even more. But when you got an opportunity to make 400% or almost 400% on the opening, you do not want to take the chance. You need to get out. And sure enough, that's what we did. And the other thing, of course, was that people were talking about that historically, the market gets hit leading up to a war. And then when it actually happens, the market tends to rally. You know, they sell the rumor, they sell the negative rumor and buy the news the shooting has actually started. So that's another reason why I wanted to get out of the option. But shortly thereafter, I wanted to wait to see how things shook out. I wish we'd gone in and bought some call options right there, because you can see as the puts fell, the calls went up. So I didn't time it perfectly. However, okay, later in the day, or just an hour after the market opened, I came in and said, okay, this market's not going lower. We are going to get this situation where the market bounces back quickly, because the shooting has actually started. And so we went for the QQQ February 25th. Okay, we bought them on the 24th. You can see down here, this was the 24th. The $332 calls. At the time there, I forget where it was trading, but it was the QQQ had dropped below 320. Now it bounced back a little bit, but I said we're going to buy this thing. And sure enough, just a few hours later, you can see they were up over 300%. And I said, let's take some profits. Now, again, we can kick ourselves for not getting that. We could have gotten even more if we held on to the very end of the day. But when you got 300% and there's a half hour left in the day, you never know. There's weird moves in the last half hour. So we got basically 700%, 300%, almost 400% in the puts, 300%, 300% in the calls. This happened to be in a very short time frame, literally in 24 hours. That's not something that happens every day, but it happens right now. It's something you can really take advantage of. And this is what we're talking about in the chat room. This past week, we had very, very, very similar situation where, earlier in the day, I'm sorry, even on Friday, when let's go back to my, hold on, I'll go back to my Bloomberg.
And all those trades are from the chat room, right? From your live
Absolutely.
trading room?
And we do it so what do you do? We have, the chat room kind of scrolls and we have, just going through, people are making comments. And I said, but we also have a separate page. And what I put in that is the actual picks. Because if you're, not everybody can watch the market 100% of the time all day long, and gonna get lunch. For me, I usually get my lunch and come right back. But people go out to lunch, or they have their own jobs, they have meetings to go to. So when I have an idea or a pick, I will put it in that second page, so that when you come back, you can look up. Have we gotten any new picks here? I also have just started in the last week or so talking about things that aren't necessarily a pick that I've made, an official pick, but something I want to really make sure that everybody sees. And one of those was JP Morgan. I was telling people last week, if this stock breaks 140, it's going to fall out of bed. I didn't choose a specific option or ETF. I was thinking about doing the inverse ETF on the bank stocks or buying JP, but we didn't do it. But still, people did take my comment and did buy those put options, and again, they made 100% or more, depending on the person. But the fact of the matter is that we have this separate page that I put in exactly when I buy it, exactly when I sell it, and then also other ideas that aren't necessarily the specific picks, but ones that people should consider and keep a close eye on, if because you have your own ideas as well. I mean, and that's the other thing too. In the chat room, we've had many instances where people that I had nothing, a pick that I had nothing to do with. People came. Snapchat was a great one. A couple of weeks ago when they reported their earnings. And the stock went up the people made 500% in one day after they reported earnings. They asked me what I thought of it. I said, the stock looks like a great setup for a rally. It looks really good. I'm not going to buy the calls, but the fact that you're looking at them, I think, is a very good idea. Well, of course, I should have listened to them. They made they came out the next day and said made 500% on my call options, and I wasn't smart enough to do that. The same thing happened earlier this week in Caterpillar Tractor, where some people came in and bought some call options. They were talking about how the stock looked. I came in and said, saw the stock was starting to run. And I talked about the technical aspect of it and said, that looks like a great play. And I kind of got lost in some other things. I never made the play. They did, I didn't, but I'm not sure how much. I know they went up at least 50%. It might've been even over 100%, but the point
Yeah,
is
and
constantly doing.
and I'm showing them the chat. I don't know who this person is. Carlson the Flyer.
Carlson the Flyer, yeah.
Yeah, he's saying, by the way, I'm also quite new to this trading group. I've learned a lot here and have made pretty good money last 2 months. I started with a small 10K account and more than doubled it since January 1st. So, and the martinis, of course, that he posted there.
Yes,
So,
exactly.
yeah, I mean, this is the general public chat. Obviously, this is where everybody's posting. Um, so everybody's there talking about their own stuff, talking about their trades with you as well. And
Right.
then you have this other chat. It's called Matt's Important Messages. So basically, here's where you're putting all the trade setups like entries, exits, and follow-ups as well. I mean, this is a pretty nice little
Yeah, this one here was
newsletter, right?
That big one there was just, just my commentary for Friday because so much was going on. I usually don't put that much writing because it gets, if you get that much, you do a post. But I put that in before the opening so people get an idea of what we were looking at for Friday, which I felt would be a real big, a real volatile day.
Yeah, well, I mean, it always helps, that you actually do take the time to write this stuff for the folks there, for the members there, because obviously based on Carlson the Flyer, it looks like it's definitely paying off. So that's really nice. That's really nice. So this is the chat. I just wanted to show it to everybody basically. And you have also a session on Tuesdays, Matt, right?
Right. We do every Tuesday morning at 11:30. We do a Zoom call, and it's about half an hour. It's usually, I always say it's going to be 20 minutes to a half an hour, and it's almost always a half an hour, if not even slightly longer. If things are really quiet, which they haven't been for quite some time, I'm not going to ramble on for half an hour if there's really not much to say. But I don't see anything like that happening anytime soon. We're thinking, maybe in the middle of next August, we'll probably have ones that only last for 15 minutes. But otherwise, what I do is haven't been able to do this in the last couple of weeks because it's been so volatile. So I usually try to start out with a little tutorial talking about some aspect of the marketplace. So usually on a technical analysis, just talk about some of the key basics and but 1 week we were talking about different triangles. We have symmetrical triangle, rising, ascending triangle, descending triangles, etc. And then you'd spend 5 to 10 minutes at the most on that, and then the next 15 to 20 we're talking about all sorts of different what's going on. Talk about the macro situation, what's going on in the overall markets, which of course is very important right now, and then what's going on, and then the individual stocks and individual groups, because so much money can be made in the ETFs now, whether it be on, you can do it on the home builders, the semiconductors, the obviously retail stocks, energy stocks, bank stocks. They all have ETFs. So if you don't want to necessarily do a absolute thing with the with a specific stock, you're a little nervous about a specific stock, you can go on these groups, and pretty much all of them have again, leveraged ETFs in which you can, if the stock goes up, if the group goes up, and we see a lot of group moves when they're 5 or the bank stocks this week fell 5%. If you own the triple inverse ETF, you made 3 times your so instead of making 5%, you made 15% in just a week. So those things and they're very liquid, and they also have options in them, which can obviously turn a 15% gain into a 150% gain. And even last week was funny because I came in, we talked about the inverse ETF on the European stock market, the European stocks 50, Euro stocks 50 index. And a couple of the people made anywhere from 50 to 100% on that one. Obviously, Europe got hit harder than we did, the European stock markets, for obvious reasons. But this is what we're constantly trying to do. Sometimes we do get those big 300% moves. We even had one, and of course, I can never go without mentioning the one I had in Viacom. Viacom no longer is called Paramount, but now.
Just to give everybody a quick recap, so for you guys to know, so these trades that Matt is whipping out here that you're seeing 200-300%, they're all right compared to this trade. Viacom is basically, Matt has the all-time Benzinga record for the most insane trade ever recommended ever from Matt. it was like 5,000 or six something percent, something like that on the weekly puts. That was insane. And just after you recommended it, somehow after hours, it just they did an offering. So these
Right.
puts went like through the like it was just insane. I got a call from somebody who was like, "Hey, like I called my brokerage. I don't know if this is real. If I really have this, if I made this much money." He had to call his brokerage to check. And I got some emails and stuff after that pick. So, but just walk us through that because I remember that day vividly.
Yeah,
But
I will do that. Do I have the screen, or is it still up for you?
yeah, go ahead and share the screen. I was just showing them the
Yeah,
chat.
sure. Yeah, great. Let me just go back to, let me just pull it up here. What we had, and again, I talked a few minutes ago about how we it's very important, of course, to use fundamental analysis. However,
Yeah,
we
can
want to
you,
use
I think
also, I'm
I don't
sorry.
know if the share. I don't know if the share. Are you sharing the screen? Right
Okay,
now?
let me hold on. Let me just do it again. Put the share back on. How about now?
Yeah. It's
Okay,
working
great. Okay, good. So let me just, here it is. Here it is right there. Is this it? There we go. Let me just widen this out for you so you can see it better. Okay, Viacom. Now, this again, we talk about how we use fundamental analysis along with technical analysis and other aspects too, especially positioning. But in this case, I mean, this was the weekly chart on Viacom. Now, these meme stocks were doing really well, and this was one of the stocks that had a big short interest, and it was getting pushed higher. So I went back and I looked at this relative strength index. It's a weekly chart, an RSI, and for those who don't know about it, but it's just it tells you when stocks get, a little overbought or oversold, and you can see when it gets above the red line, which is 70, that means it's overbought, and stop. That's why it's a red line. Stop buying. The green line down here gets below 30, gets down to or below 30. That means go ahead and buy it. Well, here you can see several times it got above that red line, and each time it was followed by a decline, right? Now look at this one. I mean, ridiculously overbought. And I just stepped in and said, this RSI above 70 is big, above 80 is really expensive. This was like a 95, I believe. It was above 93, 95, I can't remember exactly. But and I just said, this is ridiculous. It's out of control. And you look at the fundamentals. I mean, I know some of these meme stocks are running, but Viacom, are they gonna cure cancer? Are they gonna come up with the next iPhone? Are they gonna, this is not happening. Okay, it's a great company, but there's no way you can tell me that the stock, it deserves to be over $100. There's just no chance. So we went in, we bought the puts, and sure enough, the next day they were down. I'm sorry, the puts, the stock, you can see what happened to the stock. It came crashing down, made 2,500% in a flash. A bunch of, that's when I said to go ahead and sell it. Other people held on and made over 5,000%. One person even claimed they made over, theoretically they could have, could have made over 10,000% in literally a day. No, it's again, we'd love to have these every single week or even once a year, but that's not going to happen very often. But these are the things that we look for when it gets to a point where you just when again, the market isn't always right. The market that right again, some stocks can go up like that because they've been taken over. Well, sure enough, they'll stay up but they're going to stay up because they've just been taken over at that price. This was not one of those situations.
And this was a meme stock, correct?
Right.
Viacom.
Okay. Yeah, it had big short interest, and so people just jumped all over it. They saw what had happened to GameStop and what had happened to AMC, and they said, "Let's just take this one."
And just want to answer a couple questions here because I'm getting a lot of questions about the chat room, Matt. But yeah, there is a 7-day money back guarantee. You get a free laptop for everybody that joins today in this session. Yes, you will be with Matt all day. Matt is a strategist, but he has a deep background in trading at Merrill Lynch and Salomon Brothers as well. So you guys will be mirroring trading with Matt throughout the day. Matt will be posting trade ideas, setups, education, all that stuff. And the Tuesday session, that's pretty flexible. But yeah, and the laptop is only until midnight. That's correct. So someone's asking there if you're like throughout Monday to Friday. Yeah, you're there Monday to Friday, right?
Monday through Friday, yeah. And again, I will be on at some point this evening just to see how, once the futures start trading, a little after 6 or at 6 o'clock Eastern time here in the US. And so after they open up and we get any new updated news, I'll make some brief comments and then be in the morning. And, if the market's seeing a big move, I can start whatever. I mean, at any different time. But I'm always on by about 9 o'clock if it's not, if there's not something exceptional happening. And I stay on all through day too. Again, market closes at 4, usually on until 4:30 or a little bit after that. And again, on and off, just times where I'm off the trading desk for a while, away from the site. But I try to get back and scale through all the questions and answer them to the best of my ability. Once in a while, I'll miss some, but yeah. So what those people are in there, they're not afraid to ask again. Hey, you missed it. You missed this question. Don't be afraid to ask again. And of course, there's some times where I just don't have a good answer. I mean, if somebody asks me about a specific stock, and I'll be like, I don't know the stock very well. And but let's look at the chart, and I'll give them my view on the chart. But I just know enough. I'm not going to lie to you and claim that I know something about a company I don't know a lot of. You can't know them all. And so I just try to be honest with that. But again, I'm always giving some sort of answer, even if it's in once in a while. I'll just say. And sometimes my answer is, hey, I know this company. I'm looking at the chart. I look at the fundamentals, and I'm decidedly neutral. Sometimes that just happens. You can't always be positive stock or always negative on a stock. Sometimes it's like I don't know right now, and it looks like it has potential this way or that way, and we'll discuss it. But you just try to be honest. But now this is we were talking about the QQQ right now. One of the things that I've been trading a lot are the options on the QQQ. Again, they expire 3 times a week: Monday, Wednesday, Friday. So that makes it. But also they see the bigger moves. That's where you get the bigger profits because it's so highly weighted with technology stocks. And so there's also the SPY, which is the ETF on the S&P 500, the IWM, which is the ETF on the small cap. The Russell 2000 small cap index. So we're trading those all the time as well. Which is I've been focusing on the QQQs, but this is what we did last week. On Friday. The QQQ opened up. It rallied off. Sold off. I'm saying. Let me just go. Let me just put one thing here. This gives the 2-day thing. So it actually opened down. Okay, but I said, hey, the news overnight was not good. This market's going down lower, and we owned a bunch of QQQ puts that expired on Friday. And people are saying, should I take my profits now? I said, hold off. I know they expire today, so we need to be careful. And if you do sell some, sell some, but roll some of those out to Monday. And because again, you can do that. You didn't have to go all the way out to the next week because that's more expensive. You have time value issues. But here we got all the way down to here and we sold some more. I didn't sell all, but I wish I had. But I said, and again, I sold the rest of them by the end of the day. But as the market rallied here, some people were getting excited. Oh, we're going to see a rally and I was like, no, nothing's changed. The news is negative. They had hit that nuclear. I know that's not it's not the worst case scenario, but that nuclear reactor did not explode. They didn't have any major leaks. But this is not good news. Nothing here has changed. It's just Mr. Market's way of getting people to cover shorts before we get another decline. If there had been new news, if I'd seen something in other markets, but everything else in the rest of the marketplace was down. Bitcoin was down. Gold was up. Yields were down in a flight to quality. The yield curve was flattening. All these things pointed to me that this was a sucker's rally. And so we were buying puts. Again, I didn't want to get too because only 3 hours left. So we bought the puts for Monday, which we still own. And we'll see what happens tomorrow morning. But see here, and then it sold out very, very nicely. And on this little pop, I actually bought a few more right here. Now, I will say this. I did buy a couple of call options on the QQQ, very small, right in here. Because I just have a little bit of a hedge. And you think about with the hedge, if you go, and when you do it in the options market, if you own $100, if you just do it in the stock market and you have $100 worth of a stock, and then you short $100 of another stock that gives you a hedge, very, very similar stock, well, you don't make much money either way. Okay. In the options market, okay, if you see a big move, okay, geez, I lost money in my puts, but the calls will go up so much. The calls aren't going to go up by 3%. They're going to go up by 100%, and they're going to basically cover or hedge maybe not 100% of the put options, but I don't know if I'm really explaining this the right way, but is in a very clear way. But because they're so leveraged, you don't have to spend as much money to hedge yourself. Now, of course, if the market just goes sideways on Monday, I'm going to lose money on both sides. So it's not certainly not a perfect hedge. But my thinking at the time was like, this is crazy. I've got a bunch of puts. I think this market's going to head lower. I don't trust Putin. I don't like what's going on there. But anything can happen. And so I bought a few calls. But again, the amount of money I have even though I've got a lot more money in the puts, if the market gets hit hard on Monday, I'm going to make a lot of money. If the market rallies strongly, I'm going to make up most of what I lose in the puts. And so I'll be kind of even. So I'm definitely skewed to the bearish side on this trade. I don't have it. No, it's not an even hedge. It's just one of trying to cover the costs. But if it takes off, I'm going to make more money on the puts than I spent on the hedge, way more. So again, it allows you to kind of make these plays because we have the tools now. We didn't have those in 2018. We had them, but they weren't as liquid as they are today. We definitely didn't have them in 2008. We definitely didn't have them when the dot-com bubble burst 22 years ago. And now the individuals have those things. And so let's take advantage of it. And because the whole idea, I am worried about this market. I was already worried about the market because of the Federal Reserve. And I'm going to talk about that at some point here too, is that the Fed, they're tightening, okay, and this is going to be tough for the market anyway. Now you throw this into it, but again, my thinking on what was going to happen tomorrow is that something big is probably going to happen over the weekend. Is it going to be really negative or really positive? And so we could get a sideways day tomorrow, but boy, if history is any guess, recent history is any prelude, we'll see a big move one way or the other tomorrow. So we'll see how that plays out. But the point is that that I was able to. I did not now. Having said that, some people in the chat, I did not take advantage of it, but several people in the chat bought the TQQQ. Some people even bought calls and made money just like we did the week before in both directions. For me, I only made it on the side with the puts. However, sometimes, again, if you're only doing it for a couple of hours, you do the TQQQs, which are the 3 times leveraged ETF on the QQQ, and so they made money there. So we're, again, I'm not the only one that's providing the ideas out there. I comment on most of them, and it works out really well.
So just to put this in perspective, so you're basically profiting from the volatility in the markets. It doesn't matter, you're just simply, either buying a call, buying a put. It doesn't matter if the market is going up or down. You're basically trading the volatility. You're embracing it. You're not basically just going like a lot of traders are just, I'm going to sit on the sidelines and I'm going to wait for the world to be perfect so that I can buy stocks. And then until then, I'm going to feel comfortable. But it really seems to me that like the people that make the most money in the market are the most active people. So like kind of rejecting the market just because it's going down or because you might not kind of understand what's going on. It's just like not doing you good. I feel sometimes, instead of understanding and trading the volatility like you do.
Right. And we want to embrace this. This is, these things happen every once in a while. They're normal and they're healthy. Believe it or not, because the market there was a lot of froth in the market last year. Nobody likes to go through these painful times, but they do happen. And if you just, hear no evil, see no evil, all that, all that stuff, you're going to lose out. Now, don't get me wrong. On a very long-term basis, the market goes higher. And I always like to show this chart. And the people on Wall Street, most of the strategists are always bullish. I mean, they'll say, "Oh, we can have a little thing," but that's what they're paid to do. They're paid to sell. Just like car salesmen, they may not like the car, but they sell the car because that's their job, and that's what most strategists do on Wall Street. I'm sorry, that's just fact. As one guy said one time, he said for a strategist on Wall Street, it's much better for your career if you're always bullish and wrong every once in a while than bearish and right, because people don't want to hear about bearish. I'm going to tell people the truth, and right now the truth, and I'm not a perma bear by any stretch of the imagination. But see here, even though these horrible bear markets, all right, the stock market still rallied over 1,000% in the last 30 years. So, again, they're not complete. It's not like they're complete scumbags and they're just trying to sell you wrong things, because the market does go up over time. And for some people, and if you're whatever job you have and you're working 15 hours a day and it has nothing to do with finance and you just don't have the time, you want to spend time with your family and stuff like that, I understand. You just put the money away and do long term, that's fine. But if you have the inclination to be an active trader, especially in this, and we've made some real nice trades before this year, believe me, and I can show you some of them too. We've done very, very well. But when the situation is volatile as it is now, we can really maximize those success. My point is that we don't just want to be making guesses. We want to be making educated decisions, not wild guesses. And that's what I try to do in the chat room, tell people why I'm doing it, not just that I'm doing it. So that they can make those decisions for themselves. Like I've said, that's allowed some of these people to make money when I didn't make the trade. They went ahead and made the trade. It's like, based on what you're saying, man, I should do this. Why don't you do it? Well, I was stupid. I didn't. They did, and they made money. But the whole point is that if you have the time and the inclination to be an active trader, you're gonna more than just weather the storm. That's what most of the people on Wall Street will say. Oh, we'll help you weather the storm. That's great, but we want to do more than that. We want to profit from the storm, number one. But number two, on a long-term basis, and I say this every time, it also gives you the confidence when the baby is finally thrown out with the bathwater, when those margin calls come in, and because some people sell because they have no choice. But some people sell because they panic. They go, we get those bounces along the way, and each time they said, "Okay, that's it. That's the bottom. We're okay." Oh, then we got another lower low, and it happens 2 or 3 times. Finally, they say, "Oh my God, I wish I had sold. I'm out. Get me out." And they panic. They panic just as the market is getting hit, or because they have 100% of their money in the stock market, they have no cash, and in their at least in their investment accounts, they have no cash, so they can't take advantage of it. Those of us that have some cash on the sidelines, which we've done raising cash. We've been doing the last, even before the beginning of this year, and made some profits along the way. Then you're really not only you're going to be able to buy, you're going to have the confidence to buy. Okay, and so if you miss, when things really gets washed out, you might not get the exact bottom, and you might even get it on the way back up a little bit, but when the market, almost every time, when you really get a bad washout move, really a lot of fear in the marketplace, on the next bounce, all those dippers those dippers that people bought on dips for so many years, they're actually selling on the first bounce, and that's the exact wrong thing to do. And where those of us who profited along the way are not only buying at the bottom, but when it moves up 5%, we're still buying and then buying up more, and off it goes. And I've talked about this many times. Again, things like everybody said, don't be afraid, especially when a market gets washed out. Don't be afraid to keep buying cheap stocks, even though you bought the stock at $20 and now it's at $30. I wish I had bought it all at 20 and I missed some of it. And then go ahead and buy more. Go ahead. It's still cheap at $30. Go buy more because you have a $30 stock and you buy some at 20, some at 30. Your average is 25. Okay, you're adding to a winning position, right? And so then you put a stop order and you put it at 25 and you can't lose. I mean, there's always exceptions. I mean, you could report horrible earnings and the stock could gap down by 30%. But the point is, you're all but guaranteed not to lose money. And of course, as the stock moves up, you move your stop loss order up, or your stop order, because it's not a loss anymore. And suddenly the stock's trading at 40 and you've moved up your stop to 32. The worst you can do is make money. Okay, so worse you can do. And whereas if again, there's nothing wrong with buying something and buying a little bit lower, but once it drops about 10%, you got to get out. I mean, I'm talking about the common stock. You can have more leeway in an option, but you need to get out and look for another entry point. Because if you buy a stock at 20 and it goes to 10 and you double down, now you own a stock at 15, at a price of 15, but it's trading at 10. Right? You've added to a losing position. And again, it's one thing if it's down a little bit, down 5%, you want to buy some more, go ahead. Down 2%, go ahead. But you're down a lot. Now you're just relying on hope. and hope it comes back, and hope's not a good investment strategy. So again, these are the types of things. It's not just benefiting what I hear, because confidence is such an important part of investing. You want to be able to work and learn and take advantage of it, especially if we get a washout like we got here, and even in 2018, which wasn't followed by a recession. This one wasn't. I don't even know what you call that. It was a recession, I guess, but because growth went negative, but it was so short because of the pandemic. It's just a very unique situation. But here did not turn into recession, and people were selling at the bottom. And those who were able to make some money in here and have confidence were able to buy, especially when the Fed, because we had a specific incident that created the impetus to buy. That was with the Fed coming in with their major QE program. And to say, it's funny because I remember back in 2009, and the market bounced. I did not get the exact bottom, but I was in. It was March of 2009. Then, but I started pounding the table on a bullish level about a little less than 2 weeks later. And then in May, you had some big people saying that this was a major league suckers rally, and I was saying, no, this is not. And it was based on, there was a significant change. Yes, I worried about the economy. There was the financial system was still on shaky ground and stuff like that, but they had made a big change. When everybody tells you what really turned things around, it was one thing. Okay, the Fed. It was so bad in 2008. The Fed was supplying. It was all behind the scenes, but they were supplying massive levels of liquidity. It didn't help because the situation was in such bad shape. But what they did, they finally changed the rule, mark to market. So suddenly all these banks and financial and leverage players no longer had to mark to market, mark their, in other words, if you mark to market every single day, you've got to say, this is what my asset is worth, and you have to put in a certain amount of collateral to meet that requirement. And finally they said, let's get rid of that so people don't have to constantly be selling stuff to raise collateral. That's the real thing. It was literally that day. I mean, that may have been the next day. That's when the market bottomed. And as we can talk about, and they had, again, the Fed and all these other people, the government Treasury Department did a lot of things to turn it around, but it needed that one thing. And that's why I knew that it was something that could last. It wasn't just a suckers rally. And that was the same thing in 2020, because the Fed started to create so much liquidity that there was a reason. But sometimes people just again, they're relying on hope than an actual reason for the market turning around. But again, I don't have to dwell on that too much, but just to say that we have this opportunity. When this ends, all this volatility, things will calm down eventually, and we could have periods where things calm down for several weeks. There's still going to be opportunities in individual names all the time. We see it certainly in earnings seasons with all these different big moves. Those are harder to play, much harder to play, because there's more guessing involved. But you can at least make an educated guess, because if the stock is really, really oversold, you can make a positive bet. If the stock's really, really overbought. But there's sometimes people said during this recent earnings season, and they're asking me, hey, this stock, what do you think about these earnings? I'm like, well, stock's not oversold, it's not overowned, it's not underowned, sentiment's new, everything's neutral about the stock. Yes, if they report a great number in the stock, I have no idea, but there's nothing compelling, because since I don't have any inside information, if I did, I wouldn't give it, because I'd go to jail. I'm not doing that. It's sometimes the answer is I don't have an opinion here. The only way you can know is if you knew what the earnings were. I don't know what the earnings are going to be. The other times I say, I don't know what the earnings are going to be. I have no idea what's going to happen here. But if they're negative, it's so oversold, the stock probably won't go down very much. And if they're positive, it's so oversold that the stock will the stock will bounce in a big way. So those types of things that we talk about there. But my point is that there's, even when things get calmed down, we don't have quite the volatility we have right now. There's still unbelievably a great number of opportunities. And we did the same thing in the QQQs in the December Fed meeting, where we made money first on the upside in the calls and then on the downside. And again, it was a situation. It wasn't quite as much. But it was over 200% in both ways. In fact, I can pull that up for a second. But these, again, we don't make money on every one. I mean, the whole idea is to, we want to be batting 700 or 800. We want to be making a lot more good calls. But not only that, when the bad calls are made, try to get out of them quickly. So so when you sit there and you go, you're batting way up here, but then when you good risk management, you're getting rid of your losers without, and then you're letting your winners really ride. The whole thing, you're batting better than 800. You're batting over 1,000. But I just wanted to pull up this one thing here. Hold it. But this is a very similar situation that we did back in. Hold on here. Okay. Oops. Okay. Let me just pull this up here. I'm sorry. But that was the, oh, wait a minute. Is that the one? Okay, here it is. Here it is. Let me open this up for you. But during the, when the Fed, everybody was waiting around trying to figure out if the Fed was going to, there we go. Yeah. If the Fed was going to, if Chairman Powell at his press conference after the Fed meeting in December was going to make a positive comment about the, was going to, really talk about how yes, they're going to be more aggressive in tightening policy. And, the market has sold off in anticipation of that. And I came in the day of the meeting, the meeting was the 15th. Okay. It was a QQQ December 17th puts. So in other words, that was the expiration date, was that Friday. And I'm sorry, these were the call options, because the reason why is that I said all this negative stuff is already priced in, at least on a short-term basis. So a half an hour, 1:30, half an hour before the announcement came out at 2 o'clock, I said, let's buy these call options. Sure enough, when the news came out, said they were going to be more aggressive. We got a buy the rumor. I said buy the news, sell the rumor, buy the news, sell the negative rumor, buy the news, and shot up. Then it settled back in a little bit. Then he began talking at 2:30 at his press conference, and it took off. Same thing. The next day I saw it was open even higher. I said, let's take profits. 360%. I said, right up before the opening, let's get rid of these things. Let's not be greedy. And we made real nice money. However, the next day, so that was on Wednesday, right? This was on Wednesday. And I'm sorry. That was on Wednesday. So then on Thursday, on Friday, a couple days later, the market kept rallying. I'm like, oh, wait a minute here. Okay, I understand this whole concept of sell the negative rumor and buy the news, but this is still negative news. This has rallied too much. So let's go in, and I did it the last hour of trading. Let's buy the puts on Friday. Okay, so we went the December 20th. Those were the Monday puts. So again, we just flipped it. Again, this wasn't a 24-hour period. It was over a couple of days. But we completely reversed the trade and made 245%. Again, the next Monday morning, we went over the weekend. I said, let's sell off these calls. And again, we made not as much, 245. But we made over 300 on the call options, over 200% on the put options. And again, this was just, and we started on Wednesday. By the next Monday, we had made a real nice profit on both sides. And that's what you can do in this kind of volatility. So I guess my point is, even before this year, this is something that was working really well for us. And I think with not only the thing going on in the Ukraine, but the important change in policy by the Fed is going to make it going to continue to make this a great year to make money in this kind of active trading. And I want to say another thing about what the Fed's doing. Last week things calmed down and the market did rally a little bit. And here's my dog here. How you doing, buddy? He came out and he said, we're not going to go to 50 basis points with the first rate hike, but we are going to raise rates. And that relieved the market, and that's good. And I'm glad he did that. It calmed things down. But he did said, yes, we'll continue to watch the situation, the geopolitical situation in our decisions. However, the next day, it's a 2-day session he does twice a year. And one day he does in front of the Senate, and one day he does in front of the House. The first day was in front of the House. It was the House, finance, banking committee or financial committee, and that's when he made those, dovish comments, or at least less hawkish comments. But the next day, he gets Senator Shelby from Alabama, who comes out and says, "Hey, what Paul Volcker did was he really fought inflation. If this gets out of control, will you commit to fighting inflation? And he was adamant. He said, I want history to know that my answer was yes, we will do whatever it takes to fight inflation. So that tells me that even if this situation, continues to be a problem in the Eastern Europe, they are going to raise rates. They are not going to hold off. He said some things to soothe comments, but the very next day he basically came out and said, the most important thing we can do right now is to keep inflation from getting higher. And it's the right thing. Yes, it will cause some pain, but like Volcker did back, and it's funny because there was one guy, a guy I very much respect, but he was saying, you better not, if he's just like Volcker, it's going to be a big problem. Be careful what you wish for. And people are wishing that he's like Volcker. And I'm like, it's wrong. He said, and the guy said, it's because the recession has happened. They had 2 recessions when Volcker was beating inflation. Well, yeah, but they weren't horrible recessions. Number one, and number two, they inflicted a small amount of pain near term, so there wouldn't be a horrible amount of pain in 1988 or something like. They did the right thing. I mean, it's like a parent. Sometimes you got to do things like, it's not what you want to do, but we want to do that now, because it's going to be better for you in the longer term and will cause a little pain. So it's okay. I mean, these things are normal anyway. They happen. If you think we're going to go without a bear market, I mean, I don't know that I think there's a good chance we'll go to a bear market, but even if it's just a deep correction, to think that we're not going to have those anymore is crazy. That's what it's an important part of capitalism. They do happen. Recessions happen, corrections happen, bear markets happen. They're an important part of capitalism. And that's why I'm sitting here going, let's embrace it and take advantage of it rather than try to fight it and get burned by it. So these are the things that on a broad base that I'm talking about all the time, and it just tells me that even if this situation calms down, we have a Fed that's gone from a massive historic way of adding stimulus to the system to now tightening. And we have some people trying to claim that they're still accommodative. They go, technically, if you look at in the textbook version, yes, textbook definition, they're still somewhat accommodative. But we're going from there. The market was pushed higher on steroids. When you push something artificially high on steroids, you take away the steroids, which they're done with QE. QE is completely tapered back. You get weaker. You just do. So even without the Russian thing, that's why the market was down 10% even before this thing happened. And the S&P and the NASDAQ was down 15, 16%. Now we're just back down to those lows, and the situation, those lows, not even all the way below them. So with a new situation in Ukraine, and which that would mean for the negative impact that could have for inflation, it means in my opinion, that we'll have to go lower. And I've been doing this almost 40 years, be 40 years in November. I just know that it's not, those things they're gonna happen. And the people, again, a lot of people on Wall Street, they're paid to, I was interviewed I had an initial phone interview once with somebody at a very, very big firm who said, we'd love you to come be a strategist. But he flat out said, it's not really a strategist job. Your whole idea is to tell investors, the long-term situation, and so they'll keep their money with us. That's really what you do. And I was like, well, that's fine, but I work at a place that lets me think that, Miller Tabak, they let me say what I think. And I think that works out much better. And again, it allows you to embrace these situations. They don't happen the bull market's what usually happens. The stocks rise the vast majority of the time. Right now, they're not. And I think they're probably headed lower. Again, they got pushed. If the stock market wasn't so expensive at the beginning of the year, I wouldn't be as worried about it. But since it was, it does raise the odds that we'll have further decline. And again, goes to this whole issue of leverage. When leverage takes things to very expensive, because of forced selling, it doesn't stop. The pendulum doesn't stop at fairly valued. It goes to at least somewhat undervalued. That's the way it has to, because to unwind the leverage, like I said earlier, people have to sell They have no choice whether they want to or not. But that creates the unbelievable buying opportunities. That's how Warren Buffett became a billionaire. Warren Buffett became a billionaire by selling when there was blood in the streets, when there's nobody left to buy, and he's getting unbelievable things that are trading at very inexpensive values. That's where you make the big money. Don't get me wrong. People have done very, very well in the stock market over the last 10, 12 years, or even just the last 5 years. But when you really knock the cover off the ball is when you're the one who there's the kind of contrarian who can take advantage of a situation when forced selling, margin calls, whatever, cause the baby to be thrown out with the bathwater, and you can make a lot of money, especially over this long term. Then you just buy a stock and just let it. And then that bucket, the big long term bucket, you fill that bucket up even more. For me, I'm going to keep trading, but again, the bucket's going to be much bigger because we profited from the downturn. But I'm going to shrink a little bit because I'm going to put the Apple computers or whatever happens to be, they're going to get thrown out with the bathwater. I'm going to put it and just let it sit there for years, for another decade. I'm still keeping those to trade, but what happens for most people is they're the ones selling at the bottom, or they're too afraid. They get, and it's like most of Wall Street. They want to catch the middle 70%. You can never get the exact bottom or the exact top. You never get the exact bottom to buy, never get the exact top to sell. That's fine. We want to get 90%. And if you use more than just fundamentals and you have, willing to take a little bit of risk, you can really capture those things. But in most of Wall Street, Main Street, Wall Street, that's why when I turned wildly bullish in the energy stocks in October 2020, the rest of Wall Street turned at the beginning of the year, 2021, and they were up 50% in the XLE index. I'm sorry, XLE energy ETF, and the XOP was up even a little bit more. But I was like, that's great, but because you only caught that 70% in the middle on a percentage is actually bigger move because you missed half of what I had. The XLE and the XOP were up more than 100%. Okay, at the end of the year last year from where I bought it. So they're like giving themselves high fives. Oh, look how great we are. We were up 54% in the XLE. It's like great. When I got in, it's up 112%. Okay, so that's what we're trying to do here, and so far it's worked out really, really well. We've got you saw some of those comments from the people who are in the chat room. I'll go back to this one thing. It's just so key and so great that we have the ability now to participate in both directions. But not okay. So let's say we weren't. Let's say we're in and I was really bullish, and the backdrop was a really bullish one instead of being a cautious one. The same thing is true because again, you can take advantage of it more because the options in these markets are weekly options. And again, for small cap names, they don't have them. But for medium-sized stocks, large cap names, especially large cap names, very, very liquid, weekly options. You can trade them all you want. And that works really well. Okay, I want to talk about one thing here. Just made me think about it. It's going to be it's a risky trade. I didn't, it's not like I put a lot of money into this trade. But I'm concerned about crude oil. And it's even if the situation even if this thing continues to be a problem, I still think that oil could come down because I don't care how bullish the situation is, you still see volatility. Now here, I'm going to get rid of those moving averages. But you see, I'm going to go to a weekly chart. Look at the weekly chart here. See this at 82? That's oil is at $82, okay? I'm sorry, $82. Oil is 115, but it's RSI. Remember we talked about it's how overbought. I'm sorry. This RSI chart, if it gets above 70, well, this is the weekly chart. And this is really it's only been above 82 two other times, 1999 and 2007. That's a little scary because we know what happened in the overall market. But forget this is the oil market. But the point is, this is equal. I can only go back as far as 1983, but still have 40 years. 40 years. This is equal to the most overbought it's ever been, crude oil, on its weekly RSI chart, a relative strength index. Then you look at the Bollinger Bands chart, the weekly Bollinger Bands chart, And then I'll tell you about that, what that is in a minute. Bang, bang. Okay. There we go. Okay. I guess easier to read. Let's see now what the Bollinger Bands are as we take the 20-day moving average, 20-day, actually the 20-day exponential moving average. And that's the middle line, this kind of greenish, dark green, kind of grayish line. Okay. When it gets above the purple line, that means it's more than 2 standard deviations above its 20-week. In this case, it's 20-week moving average. Okay. And if it gets below the greenish yellow line, that means it's more than 2 standard deviations below its 20-week moving average. Well, this reading up here, this is the most extreme. I've only one other time, going back to 1983, that it was this overbought, or this extended. Okay. This is just getting too out of control for me to want to. Now what I've done is we went out and bought some puts on both COP, Conoco, and Chevron. I love both stocks long term. I love them, and both intermediate and long term. And so when I bought the puts, this is to next Friday. I just think the stocks could get hit. And again, because it's so extreme. If we get any kind of good news, these stocks are going to get hit hard because oil is going to get hit hard on a very short-term basis. And so I want to take advantage of that. Now let's look up Chevron, a specific stock. It's one of my, when we bought it, I bought it in October of last year. October of 2020. The stock's more than doubled, and we get a 7.5% dividend yield. So now it's still over. Its yield is still over 4%, almost still closer to 5%. However, it is getting extremely overbought. Now, here is this RSI chart. And you see it just below 81. That's very, very, I'm going to get the Bollinger Bands chart up as well. Hold on. Okay. Oops, that didn't work. Try it again. Take a second here, but the point is this stock is getting very, very overbought, and if it gets any kind of negative news, it's gonna drop, and on a very short-term basis. Okay, but this is the daily charts, and I'll put over to the weekly in a second because that's what we looked at in crude oil was the weekly chart. But see this again, way above its Bollinger Bands chart, up near 82. So the stock is just, again, it's just again, I don't know, again, it's RSI is above 80, and look at this weekly RSI. This is, again, incredibly stretched, well above that purple line, well above 2 standard deviations above its 20-week moving average. This is the weekly chart. And so it's overbought on a weekly or in an intermediate term basis, and a daily. This is the daily chart, also overbought on that basis. Okay, so I just like saying, how could anybody make a negative bet on an oil stock right now? Well, we made a similar bet in Exxon a couple of weeks ago, and we didn't make that much money. In fact, for my specific position, I came out flat because I held on to it too long. Some people made 50% on it, but the point is that we talk about these things, and it's like, okay, if you think I'm crazy, don't do the trade. You have to do all these trades. All I'm just showing is it teaches something that you have situations when the fundamentals picture is very bullish, especially if you assume that this war is going to go on, which I think it will. The last thing you'd think I'd want to do was make this bet. Well, because of other issues that I'm talking about, it's one I am going to make. Now, one last thing was also the futures traders. They have a poll of futures traders. The guys are trade these things every single day, and they're 96% bullish. Now, I'm sure there have been numbers that high before. I've never seen them. That is incredibly bullish. So everybody's on one side of the boat. Everybody's on the bullish side. So this is getting ripe for a pullback. And it may only last for a couple of days, and it may not happen. Again, because the geopolitical situation, oil will not, believe me, if the geopolitical situation continues to deteriorate, oil is not coming down. And this will be a losing trade. And we'll get out of it, before that happens. But again, another reason why, because I have we have bearish bet in the QQQs. So what happens? So I remember I have that little hedge in the QQQs where I bought a few calls. Well, if this situation really suddenly gets better and Putin decides, I'm pulling out, oil is going to come crashing down, those QQQ puts aren't going to work very well, but these puts in Chevron and Conoco are going to explode to the upside. I mean, this stock would trade down to 140, and the puts we have on it are the $152 puts that expire on Friday, this coming Friday. They'll be worth $15. They'll be 14, $15 or 12, at least anywhere from $12 to $15, and we paid a fraction of that. So so again, these are the types of things that we're talking about to give people a thought about. Well, wait a minute. If you're negative on the market because oil's high, well, there are still things you can do. And of course, what happens if the market opens? If we have a serious problem on Monday and the market opens down, we make some nice profits there. Well, our Chevron puts don't expire till Friday. We might be able to make money, and maybe we get things calm down a little bit. They talk about negotiations on Wednesday, and then oil comes down, and we can make money on both of them. So it seems a lot very counterintuitive, but after 40 years in the business, I've learned that that's really the way you want to be thinking, and it's the way to really profit. And when things get as volatile as they are now, I just started to look at some things that I didn't even talk about cyber war. We have cyber war. That's going to be a major problem.
Yeah, that's the other thing. That the other topic that I wanted to get into, to the cyber softwares. Stocks in general, considering that cyber is the next warfare, like the next war is not nuclear, it's like information war. And you've seen it play out, we've been seeing it play out. That's an actual strategy that they use, right? Like these Russian people, so like why isn't the cybersecurity software just ripping higher?
And that is a surprise to me, to be honest with you. But I think they will. The problem, again, another thing that we have to worry about. Let's say if the stock market, all these stocks are in indexes, and let's say we get a horrible news. I don't say horrible nuclear, but if we get, if the stock market is down really big on Friday, let's say it falls 5% on Friday. I'm sorry, on Monday, for whatever reason, some sort of negative news out there. Well, guess what? All these energy stocks are in the indices. All right, they're in this S&P 500, and if people are selling the S&P 500 index and the index option, the futures in the S&P, it's going to create unbelievable selling pressure in these energy stocks. And they will not. It's what the energy stocks can go up in the face of a falling stock market, but not if the whole market's getting hit. Then they just throw the baby out with the bathwater. And that's what I'm worried a little bit with these cybersecurity stocks, that if we really get a big problem, they'll get thrown out with the bathwater as well. But again, this is an opportunity I think is going to be very, very good. And you look at also, again, looking about how long this thing's going to last. And these cybersecurity stocks, again, it may be a couple of weeks away. But you look at the defense industry ETF; it continues to rally. The three-time leveraged ETF making new highs. And this is a situation where Germany's suddenly starting to build up their military spending. We're going to build up our spending. Everybody in Europe's going to build up their military spending. All these defense, I say defense, I'm not talking about defensive stocks like high yielding stocks. I'm talking about people who work for the defense industry, who make tanks and make planes and things like that. Those are going to be those continue to do well. They wouldn't be doing well if people in the know didn't realize that this thing's going to drag out for a long time. So, but again, back to your point, Rodrigo, about the cybersecurity. What can Putin do at some point? I mean, can he really go nuke? There's these tactical nuclear weapons they're talking about. Wow, that scares the living daylights out of me. God forbid that happens. But with cybersecurity attacks, cyber attacks, those are a real threat, and especially in Europe. But if they attack Europe but not us, it doesn't matter. It's still going to have a very negative effect on the market. So my point is that as we go through this time, and I want to make sure we're talking about those cybersecurity stocks. These are the ones we want to be looking at very, very closely, because I think they'll do well, because that really is now a defense industry, not defensive groups. The utilities are a defensive group. High yielding consumer staples are a defensive group. I'm talking about the defense industry, and cybersecurity really does belong in that defense industry realm in today's world. So this is going to be really, really important. The other thing, really important. The other thing though too is also look at some of these smaller companies in the cyber area. Again, there's risk involved in all that, but we'll be looking at those to see the ones who have that added, who can take an existing cyber company to the next level, and then they get bought out. So it's when you go into some of these names again, when you're just trying to guess at takeovers, that's kind of silly. I mean, it was at Peloton a couple of weeks ago. People were saying, "Oh, I'm going to buy this because Apple's going to take them over." I'm like, they're not going to take over Peloton. Maybe they will at some point if the stock really gets nailed down and knocked down even more and becomes really cheap. But what you do like are ones who can be additive to these companies and really make a difference. And so that's going to be another idea as we're moving forward. The one thing I do want to talk about on a longer term basis, two names, and it made me think about this, that I really like. And you should be buying these, and don't have to be big, buying these long term. Look at this stuff. Look how poorly Boeing has acted. Now, this is obviously they had that problem with the 737 Max. We all know what happened there. And the stock is just, hasn't been a new high since early 1999. Well, if the market really does get smashed, this is going to be, it's not going to be the one where it's going to, change your life, but boy, it's going to be one that's going to do really well, because they're too big to fail. They're too big not to succeed. Okay. And there's one stock even more so, but this one here, they cannot fail. There's only two major airplane manufacturers, big jets, in the world. And so Boeing's one of them. And we can't take that down to one. Okay, that's number one. But number two, they're a huge defense contractor to the Defense Department. They're not going out of business. They will make sure they keep getting contracts and they succeed. So if this stock continues to get hit hard, and the whole market gets washed out, this is one you want to look at. And I am talking about and put it in your kids' account, long term. No, yes, there are going to be other companies that are new companies a year from now. They're going to go up 100-fold. They're going to change the world and all that stuff. That's great, but still make these part of your portfolio. The other one is Intel. Now, Intel hasn't had the same kind of problems that Boeing has had, but they've certainly had problems. And again, it's another stock that's done nothing for several years. They just didn't innovate. It was one of the titans of the technology industry or technology sector. In the 90s, 80s, 90s, and certainly the 90s and into this century. But the last 10 or 15 years, they've fallen by the wayside. You can see what the stock's done. It's done nothing. It's had some big rallies, but it's also had some big declines. However, and they got out of the manufacturing chips. Well, they're getting back into it now, and because they have to. And the U.S. government's like, we get 30% of our chips from Taiwan. And what happens if there's a war for Taiwan? The supply of those chips are going to dwindle to nothing. Okay, number one. Number two, if China does take control of them, then we're going to be reliant on China for these. We can't have that. And the only company that has the capacity to manufacture, there's a lot of other great companies. Advanced Micro Devices, great company. They don't have the capacity to manufacture chips like Intel does. And Intel, and there's a reason why the president had the CEO of Intel at the State of the Union address and introduced him to the crowd, because he's like, this has to work. Right? The next day, the Commerce Secretary, she was out saying, this is an issue of national security. And they're building this big plant in Ohio. They're going to expand on that. It can't be done overnight. The stock may not go to the moon. It may be a couple of years, but it's not going to lose much money. They are too big not to succeed, or too important not to succeed. All right? Because the government's going to make sure they succeed, because we have to make sure they succeed, because we have to avoid being reliant as we have been on Taiwan for our chips. just has to happen. And not only that, this new CEO is very, very good. He's got a great record in turnarounds. It's hard to turn around a battleship or ocean liner quickly. It's going to take some time. So I'm not saying, hey, you're going to buy this stock. But if this thing gets washed out with the rest of the market and we get a 20% decline in the S&P and this stock's down, this is one of the stocks you're going to be buying. Not because you think there's going to be other ones you're going to buy because you think, geez, it's going to catapult higher over the next 2 months. This is one you're going to be shifting into that long-term bucket, because when a decade from now, these two stocks, Boeing and Intel, are going to be higher because they have to be higher. They are too important. Not only are they too big to fail, they're too big and too important not to succeed. And Intel, even more so now, given the geopolitical situation. There are other U.S. defense contractors. There aren't any other chips makers who can deliver the manufacturing capacity we need, and Intel is one of those. So this is a company. They're going to be a story like Apple and like Microsoft. Apple Computer was a great company. They pushed out Steve Jobs. The company, as they fell on hard times, but wasn't doing very well. Came roaring back, obviously, in a major way when Steve Jobs came back, and now Tim Cook is also taking it to another level. Same thing happened to Microsoft. Bill Gates left. The economy went down. Sorry, the stocks struggled. I mean, again, it was still a good company, but it wasn't. It lost its elite status, and it made a big comeback under Mr. Nadal. And now we have this. I think the same thing is going to happen to Intel. You're going to see Intel go back to being one of the key elite companies in the long term. But again, and I could sit there and talk about, you could sit there and listen to a semiconductor analyst tell you why that won't happen and this and that. And I'm telling you, in this situation, just you have to look at the broader picture. And and they're going to help them succeed in other ways, because if they've got to succeed in other ways so that they can make sure they can be a very good and strong manufacturer. I kind of got off on a tangent there. Those are longer term calls rather than some of the stuff we're talking about, but it shows that we're not just thinking about the market in the next few days or the next few weeks. We're thinking about the next few months and the next few years and in the very long term. And I think that's really the best way to look at the markets, looking at all different ways. It keeps you sharp and keeps you honest too. It keeps you from getting too concerned about too myopic with your thinking. And it's some of the most brilliant minds in the world, whether it be in the stock market, whether it be in sports teams, whether it be political people. They get too caught up in some myopic things that they miss the big picture, and that's why I want to be looking at intermediate and long-term issues all of the time as well. This is another chart right here. Again, we'll see where we got here. This is a death cross in the S&P. In the QQQ, the NASDAQ 100. Okay, now technically it depends. The real people say you really need to see the 50-day moving average cross below the 200-day moving average. That's a death cross. Well, but the true believers will say they both have to be declining. Right now, the 200-day moving average is rising. I hope you can see that. But the point is, but it's still negative. The last two times that has happened, and one was really bad, one was not. Okay, back in 2018, it happened right here. Whoops, right here. And the QQQ fell another 16%, Okay, in this case, the 200-day was also rising. So it wasn't official, and yet it still hurt the market. Again, when you see moving averages, because they're moving averages over several days, doesn't catch the exact top, but it does confirm a change in trend frequently. For some indexes and some stocks, it works better than it does for others. So that's why I always want to look back at, hey, for this particular stock, is this a good indicator? Yes, no. In this case, you say, well, really, but look at this time. We had a negative cross here, but it was a kind of a head fake. And in fact, the market was followed by a huge rally. Yeah. So it's completely worthless. These death cross things. Well, actually, no. They're still very helpful. The reason why this one took off because the Fed came in and supplied massive historical levels of liquidity to the system, and that's why the market took, which it already took off, and that's why that was a bad indicator. So what I'm saying is that if we do get a similar big change, of course we'll change, But right now, if things stay the way they have been, this is a negative development. This negative cross is a negative development, and probably and tells us we're going lower. I'm going to show another one thing here. Again, just give you an idea of the stuff we talk about. We made some real nice trades in NVIDIA last year. I'll go back to this thing. The other thing I'm going to go back and say, what was, well, let's do Apple first. Apple Computer. What a great company, right? What a great stock, right? Great. Okay, now, in 2021, the stock market went up, whatever it was, almost 30%. And Apple Computer was one of the best stocks out there. Great. But look at that. Even in the broad market, the worst it went down was 5%. And even that only happened once. And it only lasted one day. Look at these declines. In this unbelievable rally, this great stock saw 4 different declines. And these were not small declines. These were not 3 or 4%. This is, I mean, what are you talking about? Well, Apple can't go down. It's the greatest company in the world. I was like, well, wait a minute. In one of the best rallies, one of the best years for the stock market you're ever going to see, especially when it was one that was not coming off of it did come off the sell-off the year before, but let's say 12% down, 10% down, 19% down, and then it's early into this year. So actually, I would say, 50% down. And it's like, what more do you need to know? Okay, doesn't matter how good the market is. Doesn't matter how good a stock is. A really good stock. People get too enthusiastic about it. It gets way ahead of itself and it needs to come back. That's why we want to be able to use these situations. And this happened last year before the volatility really took off. This was one of the least volatile years in the stock market. It just went slowly, steadily, straight up, right? And yet Apple still saw big moves. Now, again, for a little tutorial here, NVIDIA was even a better stock last year. And again, one of these great chip companies. Everybody talked about how great they're and rightfully so, how great how great the company is and how great they're going to do over time. Okay, but again, notice how what their outlook looks like. Their long-term outlook is fabulous. But again, there we go, 24%. Didn't look like that much, did it? 24%. Okay, now, and then again, we'll just keep drawing them up here, but you can see. They had several big declines that we can take advantage of. Okay, and then of course they had, and that doesn't. On top of that, when the stock got oversold here, right? You saw the RSI got oversold. You buy the stock, great, 40% rally. Thank you very much. So we can take advantage of these things. Looking at within the fundamental picture was really, really good, but the technical one gave us ideas of where we could take advantage of it in both directions. Okay, I'm going to do, but I'm going to, the thing just froze, but I think I can pull it up here. NVDA, okay. This is NVIDIA again. And we're using what's the MACD chart. MACD, I just talked about the golden cross and the death cross. I mean, the death cross is taking place in the NASDAQ. The opposite, of course, is a golden cross when the 50-day moving average moves above the 200-day moving average. But here was right back in here. And again, some really smart institutional guys saying, are you kidding me? This is the best stock in the stock market. Why could you turn negative? I go, because look it's flattened out here. It's flattened out, but its MACD cross has had a negative cross. Now, what the hell is a MACD cross? It is a shorter term indicator, but it's much like the golden cross and death cross. But instead of using a 50 and 20-day moving averages, they use the 9-day and 12-day exponential moving averages. But it's, again, shorter term, but it tells you, again, doesn't pick up a top, but it tells you that it's losing momentum, is about to roll over. So I said, look, again, look at this. Even though the company looks great, look what happened. It saw a negative cross there. Stock went down 24%. Negative cross there. Stock went down. Negative cross there. Stock went down. Negative cross there. Stock went down. We're seeing another negative cross. I think the stock has to go down. And of course, it worked out really, really well. We made, I have the chart up on my other thing there, but we made, I think it was 200 to 300%. Just a really nice move there. We went out a little bit further. It wasn't just in a couple of days like we did on those QQQ trades. It was over about a week or so, week and a half. But again, made really, really good money because we used more than just the fundamental outlook. We looked at different, we look at, we took Bollinger Bands charts, RSI charts. We look at certain chart patterns, head and shoulders patterns, wedges, triangles, except head and shoulders. Did I say that? Things like that. And of course, broadening tops, which was a big issue in the semiconductors. But now again, it doesn't work. Now, right now, what's it going to happen? I don't know what's going to happen. See what happened here? It kind of got stuck. It did nothing. So right now, we want to see if this thing breaks down or breaks out in a meaningful way. That should be the next trigger for what we want to do. When it comes to NVIDIA, we're going to let the stock market tell us what it's going to do, because even though its fundamentals look good and you want to lean to the bullish side of things, I'll wait until this tells me which way it's going to go near term, even though eventually it should rally nicely. But again, these are the things that we're looking at all the time to help people learn about, instead of just trying to guess. Oh, the stock's up a gazillion percent over the last, so it's got to be going higher. That's kind of human nature to take the current situation and extrapolate it out. And that's why people are buying the energy stocks hand over fist. I was buying them hand over fist 16 months ago. Now I'm saying, again, if you buy, I'm saying hold off. And I'm not saying dump them at all. And I'm making, again, a couple of short-term bets, but negative bets. But for the most part, I'm just saying, what I'm really saying is like, let's hold off. We'll probably get a better chance to buy these stocks again after some sort of a pullback at some point in the near future. It's, again, it seems very counterintuitive, but that's really how trading works. And, it's something I've learned over the 40 years that I've been doing this. So it's I just trying to look at my notes on what that's. Oh, there's one thing I want to talk about that's so important is these leveraged ETFs. They're great, but they're trading tools. They are things that you do not want to use. You have the S&P 500, 3 times QQ, 3 times leveraged ETF. They have them on the index ETFs. They have them on most of the group ETFs. Semiconductors, tech stocks, whatever group you want to say, the industrials, whatever it might be. They will have these things, but they are leveraged. They use futures and options. So, got to be careful. If you buy the KBE bank ETF and the bank stocks rally, you're going to go up. If the bank stocks go down, it'll go down. The KBE will go down. If the bank stocks go sideways, the KBE bank ETF will go sideways. For the leveraged ETFs, however, when the market goes sideways, they'll go down. Okay, just like an option would, because the time value, as you go closer to expiration, the time premium shrinks. And that's what will happen. So the key is, I don't trade them for more than a week. We've gone out 2 weeks once or twice, but usually about a week. Again, because groups and stocks take breathers over a short period of time. And if you just hold on to it, again, if you hold on to a regular ETF, you're fine. But if it's a leveraged ETF, and my point is, if you watch the KBE and it rallies nicely, and you own the calls, and you own start again. The KBE rallies nicely, and you have the leveraged bullish ETF, you're going to make money. You're going to make more money. Of course, if you have the leveraged negative ETF, you're going to lose money. If it goes sideways, both the bullish leveraged ETF and the bearish leveraged ETF will both lose money because they have options and futures that will, the time value will. So do not try to buy those and own them. They're trading vehicles, unlike the regular ETFs, which can be ones that you can own for longer periods of time. Just something that's very, very important for people to understand, because they sit there and go, what the heck's going on here? My KBE, the KBE went up 5%. I have the triple ETF, so I'm up 15%. But now it's 2 weeks later, and the KBE is still up that 5%. But now I'm only up 9%. What the heck happened? Well, that time value took it back down. So, and that's why these leveraged ETFs, they will always go lower over a long period of time. That's why they have to do inverse stock splits for that reason. So I didn't get too much into that. But the point is that these are very. This is we have short-term trade, and again, it's this type of stuff that we are constantly talking about in the chat room on a regular basis. I just let's see, while we're talking here, see if anything's happened in the markets, and then we want to move on and have answer some questions about picks that you guys, or stocks or ETFs that you guys are interested in, hold on, so that so we can just kind of get a little bit idea of, I'm rambling about what I think is important right now, but there's things that I haven't necessarily thought about or today, because there's so many different things to think about. I'm just going to look at Bitcoin. I was just saying, now it's down. I'm guessing because this news continues to be somewhat negative. It's not horrible. I mean, we got the battle lines are very, very well drawn on a near-term basis. I'm a bull longer term on Bitcoin and on cryptocurrencies, especially Ethereum. I think might like better. I'm going to get rid of these are the moving averages, but this 50 is the yellow, 100 is green, purple is 200. But I'm going to take those down. Okay. So I'm going to go back a little bit. Okay. So we know here, this 30,000, that is kind of the line in the sand. It got down to that low in the beginning of last year and held, got down it several times last summer, quite a few times, and that's the other thing too. We got slightly below that 30,000 level. Whenever you break below a support level by a small amount, that's not a compelling move. It gets slightly above a resistance level. That's not a compelling move. Not yet. You need it more meaningful, usually about 2% before you get to it, because you get head fakes all the time. In fact, some of these guys, especially with their algos, they try to fool people, and they go, let's push it up a little bit above that resistance level and then short it and push it right back down. Or just the opposite. Let's knock the stock down. People will short it, and then we'll squeeze them on the way back up. So be careful of that. But you can see here how, again, the 30,000 level is the key. That's the line on the sand. If it breaks below that, things are going to get a little dicey. I think it holds that level, personally. But that's one to really look for. And again, longer term, it should be fine. But a meaningful break below 30,000 is going to scare some people. On a shorter term basis, we do have to, we kind of got this double bottom. The battle lines are quite well drawn. Let me just do one thing right here. So we have, okay, I just want to I use a green line for resistance, usually, not always, but see how we got right up to that level, kind of a mini double top. That level is, so, just below about 46,000, about 40, that's going to be key resistance. If we can break above that anytime soon, that's going to be really bullish, because you can see, and I'm going to blow this up a little bit. Okay, you can see it's already above. It's well, people got really, really nervous with this decline, and I understand why. But see how it's broken back above that that trend line? That's good. It's made a higher low. Okay, here was making lower high, lower low, lower high, lower low, lower high, lower low. That's not good. Finally made a slight higher high. It was only a slight one, but it was still a higher high. Now we've made a lower high. Take it back. We made a higher high. Now we've made a higher low, right? And higher lows, higher highs, that's positive. Lower highs, lower lows, that's negative. It didn't make, if this had followed up with a higher high, it really would have been bullish. It didn't make it. It's not really a lower high, it's just right here. So in other words, that's the key resistance. If we can avoid making a lower low, avoid getting below 35,000, break above that, it's going to be really, really bullish on a technical basis. Forget about, is it a good, inflation hedge? Obviously, this rally here had a lot to do with what was going on with Russia and their banking situation. Now it's giving back that up. That's why I like gold, and I'll talk about gold in a minute. But here on a near-term basis, you see 35,000. You see it got down to there, a little below it. You break below that, it's going to be a concern. But the key is going to be 30,000, that level I talked about before, plus it would take it back below that trend line that I just drew. But right now it's looking pretty good. You just got to be, this was disappointing. I really thought this might break out, and that would have been really, really bullish for on a technical basis. Longer term, all you need to know, in my opinion, is that a lot of congressmen are buying it. And one of the things is that you worry about is that, what's government? If government loses control of the currency, what will that do? It was like, well, when you have not just the people that we've all read about recently who've been very aggressive traders, Nancy Pelosi and some of these others, but even people who don't trade at all, have been buying cryptocurrencies in the last year. If members of Congress are doing it, they must know something. And so I like it on a longer term basis. Let's move to gold. Bang. This is, okay, now obviously a real nice move there. Okay, we here's one where we bought the GLD, which is the gold ETF. Also the GDX, which is the gold miners ETF, has been one that we've had in the chat room. They've been very nice plays for us. See, they're here. Now, this is what I was looking at earlier this year. So I'm going to do it on these are the intraday charts. Oh, I'm sorry, intraday. This is the, but here's one, sorry. Okay, this is gold on a closing basis. This is just gives you the closing moves. What is wrong with this thing? I'm sorry. Give me one more second here. I'm just doing fat thumbs. It'll only take a second. Okay. Then I'll go 2001, 8. Okay, so what we had here was a symmetrical triangle pattern. And this is what we talked about in the chat room. And I said, this thing looks like, I just didn't know where it's going to go. And it kind of danced around in that room. And I'm sorry, in that kind of, in that triangle pattern for several weeks. And yet when it finally broke above it, I said, okay, let's jump into this thing. Let's jump into this thing and buy it, okay? So you can see it was, there goes my dog. He's leaving. He's bored with me. There we go. There. And I should have drawn it from down here anyway. So I'll draw that here. And bang. And bang. It's called a symmetrical triangle pattern. And when we broke out of that, we turned really bullish, okay? Earlier this month. And we made some real nice money in the chat room buying the GLD, the options, the call options on the GLD and on the GDX. So these, again, and part of the thing I just said, I realized that, hey, everybody had been talking about the cryptocurrencies being a great hedge against inflation. Obviously, that was losing its luster. So with that was losing its luster towards the end of last year, what was left? I mean, it was obviously gold, and this is trying to break out. And I've been saying for a while, once it broke above that, it will head up to its all-time highs. I still think it will do that. Let's look at it though real quickly. Again, its relative strength index. You can see it's getting a little overbought. It's not extremely overbought. So again, if the situation continues to deteriorate in the Eastern Europe, it would be a problem. But you can see here, it's getting overbought, but not as overbought as back here. So again, it looks to me like it wants to go back up and test those highs from 2020. That's going to take it up towards 2,100 above. So it's probably still got another $100 to go. At that point, I'll start looking at situations where we want to buy put options in that gold. Even though I am bullish on gold longer term, and again, there'll be short-term trades. We'll go out a week, maybe 2 at the most, to buy some put options. And again, it'll depend on the VIX and things like that, because the higher the VIX goes, the more expensive the options get to buy. And I just want to say another thing too, is when we talk about these options and things, we definitely move towards the, there's a situation people will call me and say, what do you think of this? This stock, and I go, well, yeah, well, look at the options. They only trade, a couple of dozen options a day. And the spread between the bid and the ask are horrible. I'm sorry, but this is just too risky. The chances the stock could go, you could buy some nice call options, and if the stock rallies, they'll look good on paper. But when you turn to sell them, there might be not enough liquidity in it for you to sell it at a profit. You may have to knock the thing down. So again, this is something that we constantly, or you look at a stock that has a major, it's a really expensive stock. Well, it's that means their options are going to be very, very expensive. Doesn't mean, I mean, I say expensive, if the VIX is down at 15, they'll be cheaper, but they'll still cost a lot of money to buy. So, it just makes it tougher. I want to see if that's what we're talking here. I'm going to get Rodrigo on. We'll talk about some other names. But here's Google. Now they have Google, of course, has two stocks. They have the Class A, Class B. This one is also seeing a negative cross, okay? A death cross, even though the 200. Now on the one that most people trade, I shouldn't say that. They both trade very, very well. But the one is GGOD. This one is not quite there yet, but it's getting close. This is such a great company, such a great company. Oops. And it's got great long-term prospects, but it doesn't mean it cannot. But the thing has been stuck in a side after outperforming in a major way since 2020. Since the pandemic lows, had this unbelievable rally. Well, it's been stuck in a sideways range, right? If it breaks below, we get a negative. If it breaks below 2,500, this stock's going to get hit hard, and we're going to be buying some put options in it. However, this is going to be one, if they throw the baby out with the bathwater, that we're going to back up the truck and buy a lot of stock at some point later this year. It's such a great company, and then they're not turning around anytime soon.
Right.
Anyway, there's a lot of other things a lot of other names, but I'd love to give some of the ones that you're interested in before we wrap things up, and because there's a lot of different names we can be talking about right now.
Yeah, and so I think, I don't remember where I saw this. I don't know who it was, but it's definitely like someone big on a Bloomberg interview, basically, that he was saying that we are or could be in like a super bubble. And you've seen some scenarios where, like, for example, in February, all the SPACs totally tanked, right? And then you had all this other, and we did have some pent up demand in 2021, but that's compared to what? Compared to 2020, right? Compared to COVID times. And you like, it just seems like this market, or I don't know what's happening, but it looks like it just feels like that we might be seeing like I don't know, are we at the bottom of it? Are we still in it? Because you've seen different asset categories fall, all the way from SPACs to other types of deals and all that stuff. So what is your take on that stuff, Matt?
Yeah, I think it just shows how the market is somewhat unhealthy. I mean, one of the things that I was hearing a couple of weeks ago, and you had some people come on and say, don't worry about the tech stocks and don't worry about the stock market, because so many tech stocks have had big corrections, 30, 40, even 80% declines. So the bear market's already taken place. And I'm like, well, it's one thing if you're a 25-year-old kid on Wall Street that doesn't, you're on Wall Street and you're learning, and then that's great. But these people are in their 40s and 50s and they've been doing this for 20 years or more, and I'm like, have you done any research about history? History tells us that when the big cap names hold up and the rest of them get clobbered, it's the big cap names that eventually fall. It's not the smaller cap names that play catch up. It's like a foundation to a house. You're building a wooden house, okay? And you get the big big foundation, right? And the big key stocks, and they're being propped up. I mean, even especially if the thing starts to get wobbly, they get propped up. In this case, it was propped up by the Fed. And then, but at the small companies, all the termites start getting into the frame, okay? Eventually, the big beams eventually can't be held up because and then the whole thing falls over. And this is the same thing. History tells you that when a lot of stocks see major corrections, major dips, the way it's resolved, the divergence that's resolved, is usually the big cap stocks going down and meeting. Again, they won't fall 80%, but they'll go down. And so that's a big concern. But yeah, it goes back to that thing you were talking about with the SPACs and stuff. There was so much liquidity in the system, so much leverage, so much risk taking, and the Fed is pulling back on that. QE is no longer exists. They're about to start raising interest rates. This summer, they're going to start cutting. They're going to be cutting, trimming the size of their balance sheet. This is a headwind. Whenever the Fed tightens, the market goes down. Sometimes there's a big lag, Okay, these people come out and try to tell you that it's actually bullish. It's crazy. But when the market is expensive, it goes down, and that's why this one's going down quickly.
So
No lag.
so let's say right. So you had all these SPACs, you had all these things that blew up pretty much since last February. None of them look at ARC, none of them are even close to that high. And some people even say that we had inflation actually, like the market priced it in fully at that point. But like, if you're seeing that happen, then the last ones to fall are the Googles, the Apples. You're looking at Microsoft, man. Microsoft does not look nice. That chart is not what I don't know. It makes me nervous looking at Microsoft at those levels there. And I'm wondering, these are the last stocks to fall, right? Because everything else already dropped. You already had PayPal go to like literally COVID bottoms. You have these really great stocks that they're just cut in half or more. So if Microsoft and Google follow that route, which, hey man, PayPal surprised everybody, right? So like, do you think that could happen? Like we could just see like a Microsoft or an Apple just gap down 20%, something like that?
Well, I'd say gap down, in one day, like that. But could it fall 20% from here? Absolutely. And it goes back to the one thing I've been talking about for a long time is this whole thing of the insider selling. Now, I talked about Mr. Nadella earlier. He's done an unbelievable job turning this company back around, and the stock has had an unbelievable run. As you can see, and that's starting to get close to a death cross there with its 50-day. It's still a ways away. But my point is, we have a situation, and those people who've been on these calls before know what I'm saying. But it's just follow the smart money. These people know. Mr. Nadella came in right here, just before Thanksgiving, and sold $274 million, half.
Yeah, you called it live here. I remember when you were talking about that, and just from that moment on, everything just started going down.
Yeah, I said, look at this, the insiders. And a couple weeks later, he sold more. When it bounced back, he sold more. And he sold a total of 2/3. It ended up being about $375 million. Okay, people don't sell that much. I mean, the insiders sell all the time for whatever reason. I always say, if you want to buy a $10 million house on the water someplace, go ahead, sell some stock. But when you sell 2/3, hundreds of millions of dollars, the only reason why they do that is because they know the stock is going to go down and not get back to that high level. Doesn't have to for a couple of years. Okay,
and I remember you were saying like that the last year was the highest in history for insider selling, something
right.
Like
by far. And I'm talking about in the entire business. These people know, and it's one thing. There's nothing unethical about what they're doing. Mr. Nadella has done an unbelievable job, and he filed everything. But I just think he saw. Look what the Fed is going to be is doing. They're going to be tightening. My stock has become very, very expensive, and I want to take some chips off the table, and some serious chips off the table. He's still going to get more shares every year when he gets paid. He's going to get more shares. So it's not like this thing is going to it'd be one thing if there was some sort of an accounting scandal, if some of his chips were lousy chips and they weren't going to work. No, then people going to jail. This is just a guy saying, I see what's going on in the marketplace. I see what the Fed is going to change their policy. I want to take some serious chips off the table. And Rodrigo has heard me say in the past. I mean, that's when the insiders sell in a big way, you have to take notice. I was pounding the table on this right around Thanksgiving. It's going, this is a serious development. And the reason why is, again, if you've heard this before, I've said it many times, so I'm sorry to bore you, but 1999, Goldman Sachs, the partners sold a big chunk of their money, of their holdings, because they saw the stock market and their business and their stock price was too high and was going to come down. 1999. What happened in 2000? Goldman Sachs has been a private company for 100 years. Why would they go public? Because they knew what was coming. Okay, Blackstone, one of the biggest, certainly if not the biggest private equity firm in the world. They've been a private company for 25 years. 2007, summer 2007, they went public. The partners sold a big chunk of they held on to some, just like Nadella has done. Still hold on to a decent amount, but they sold a big part of the public. Why? Because they saw the bubble and they wanted to cash in. That was 2007. The top of the market happened 3 or 4 months later. We had the same thing in Glencore, the big trading firm, commodities trading firms out of Switzerland, commodities trading firm out of Switzerland. They went public in March of 2011. The top in the commodity markets happened in May, 2 months later, and it was an 8-year bear market in commodities. They saw that things had gotten too far out of hand. And then, of course, Sam Zell, who sold his entire company, who's the billionaire commercial real estate guy, sold his entire company just before the top of the real estate bubble.
Right.
These are their business. They love it. And Nadella, he loves his business. He knows he's got great, but he just sees it's gotten too expensive. Time to sell. That was it. So the chances of Microsoft's going down further. I think if you own it, you don't want to completely sell it. If you want to take a few chips off the table, if you own it, your long-term thing, great. But we're going to make money in Microsoft on the bearish side of things in the next few months, and before the end of this year, and we'll make it in both directions. But just because it's a great company, remember what this chart I showed on Apple, the chart I showed on NVIDIA, even great companies see big corrections. And, of course, Amazon, we go on and on about all great companies that have done that.
And so I know that you and I have been talking about, like, we've been covering this whole like Chinese real estate, thing that's been happening there. We've been following the whole, what's the name of this company, man? Fantasia. Well, I even forget what's the name of this.
Well, we had Evergrande was the first one, but now we have what's it called? And I'm not sure how to pronounce it. Zienda, I believe they're the most recent one. And it was funny because right before the Olympics, everybody was worried about them. Right before the Olympics, they said, no, we got plenty of money. As soon as the Olympics were over, they said, actually, we may not be able to make our interest payments.
These are just, they've just been lying, man. That's why you cannot, like, that's why I don't trust any stock in China, because these guys lie through their teeth in and out about everything. So it's unbelievable they do this stuff, man. Like,
and they can get away with it because they have a different system than we have. So it's just these things that get, when you have a real estate bubble implode. I mean, China is doing some things, they're picking up some fiscal spending, but they are clamping down on all these industries, and they have a real estate bubble that's bursting. The second biggest economy is not going to be able to come back the way it has in the past. And it's the right thing for them to do, for them to clamp down. They've got too much froth and stuff in the market. Now, obviously, the reason they're doing it isn't great, because they're doing it because some of these rich people are getting too much freedom. But again, it's still, you don't want this froth to build up too much. But you have too much froth in China, too much froth in the US, the world's biggest economy, the world's second biggest economy.
Yeah.
They are both doing things that are going to make it tough for growth to take place this year. And that was even before we had the Ukraine situation.
Do you think that, like, if let's just say, like, I mean China's growth cannot be, like, unlimited forever. They've been slowing growth, but, like, if it slows and it gets too bad, I mean, wouldn't US companies fail? Like, I mean, Apple sales are huge in China. You have all these other companies that depend on the Chinese consumer. So if you were to take that away, at the end of the day, like, hey, we would have much weaker, less growth here, right?
Yeah, less growth. I mean, they wouldn't fail. I mean, they wouldn't go out of business or anything. But it's going to impede their growth. I mean, Apple puts out so much cash. Their free cash flow is astronomical. There's a good chance that'll get smaller, and that will have to have an impact on its stock. And it just, Amazon changed the world over the last 25 years, but just in the last decade, they've had 24 corrections of anywhere from 20 to 60%, because because people love it so much they take it too high and it has to come back in.
Yeah, and well, I mean, that's the thing. Like, I know that you've been calling for, you called every single correction on time. So that's great for the chat members, of course, that they're always up to date and all that stuff. But, like, do you really see this market still, like, dropping even further? Do you think we could go back to the pre-pandemic highs, considering all the liquidity will be gone, and we have all these issues happening?
Well, it's certainly possible. I mean, one of the things that we're hearing from a lot of technicians is 3,800, as that could be the next possible level, and that's right. It's a 38. we get into these technical things with the Fibonacci relationships, which is a mathematician from the 15th century in Italy, but it's something just look it up. A guy named Fibonacci. Okay, hold on. 2019. Okay, now, but to get all the way down to here, it is possible. 3,400. Now again, I'll show it here. This is Fibonacci relationships because the market tends to retrace in these mathematical levels. It's amazing how often it happens. But you see that 38.2%, which is a Fibonacci level, is 3,800. That's what people are looking for. I'm thinking it'll be more like 50%, which will be, down near that 34%. I'm sorry, 3,500, which may take it down even as far as 3,400 that you mentioned, the old high before the pandemic.
Pre-pandemic, yeah.
But the reason why I say 50%, is that, again, going back to what I talked about earlier, is that when you get the unwinding of leverage, they always overshoot. That's why I think they'll overshoot 3,800 to the downside. It'll be closer to 3,500.
Yeah.
Maybe even 3,400. And
you've been talking about margin debt for a while and rates and interest and all this stuff. And I remember like a year ago when everything was going up, I just remember this random guy who was he was saying like rates don't matter. Like we, just give us picks. And I'm like thinking like, it's really not the way to approach the markets but it didn't matter back in that time because everything was going up, Matt. Right. So like you could profit, you could be just literally a duck, just click buy and make money. But like now in these markets, now everybody is scrambling to figure all this stuff out. And I remember that like a year ago, when you were talking about all this stuff, I was paying attention. I was like, this is important. This actually matters in the markets. And then, that's why I was not, I didn't take as much pain as most folks did with the growth crash, because I kind of was following your talk on rates, your talk on the Fed. Chewy has a great comment on the YouTube. He says, we also have midterms coming. So that, what is the implications of that? If what is it, the House or the Senate, or is it both?
Well, I mean, either one could go. I think the feeling is that the House is going to be, well, again, a lot of things, especially with this war going on, and a lot of things can happen. And of course, the Biden administration is now saying, look, we brought together this coalition. So, and his Mr. President Biden's poll numbers have improved. It's only been 1 week, but so we'll see if this makes a big difference. But right now, it could create some serious problems, and they're going to try to. You can already hear it. Members from the Democratic side and these morning talk shows blaming the reason why he's doing this. They say is because Trump was weak on Ukraine or whatever. That'll be the battle going back and forth. That's one thing. And when it comes to politics, I do discuss them because they're important sometimes to the stock market. I never discuss what I think is the right thing or the wrong thing. I'm just what I discuss is like, what kind of impact will this have? That's all. I mean, why you won't care about what my opinion is on politics, but I hope you do care about what impact it will have on certain groups, certain stocks, and the market overall. But we have the midterms coming up, and I hate to say it, but part of that, and again, not that he can control it, but the Biden, the longer this goes on, because he can't be blamed for it, the better it is for him, because it takes people's focus off of inflation. In fact, he can blame the inflation issue more on Putin than himself, and maybe he doesn't deserve the blame. But he's president; he gets the blame. That's just the way it works. Works in both directions, on positive and negative. Now, but he'll get a lot less of the blame if Putin continues with this war, and people are going to be focused much less on on COVID and things like that. So, I mean. What was COVID? I almost forgot what it was suddenly.
And now, well, I mean, dude, the Russian economy is just like free fall, tanking. Like the ruble is down like 30 something plus %.
Yeah.
So I mean, they're pretty much trying to put Russia back in the Stone Age, right? Like with all these things.
Well, the thing is, we do have to be careful about being too negative on it. Now, I do believe those people who've been saying in the last week, Russia is uninvestable right now. And it's funny because in the bond market, some really smart bond guys are buying some of these Russian bonds. And again, those are harder for individuals to buy, and it's more on the institutional side. But the RSX, which is the equity ETF, I agree with them. It's kind of uninvestable right now. And if I miss a great opportunity, that's okay. I don't know enough about what's going on in Russia on a detailed basis, but from everything I read, this is not a good situation for them. But we do have to remember that, again, it's a mid-year election, and the President Biden, he's talking about these sanctions with Russia and to include Russian oil. But if oil prices shoot through the roof, that's going to hurt Biden as well. And so we have to be realistic. There are certain people, certain countries who still need that oil, and he can provide it for them. So to think that they're going to go back to the Stone Age quickly, probably not likely. And so don't get too negative on them too soon. Having said that, I'm not buying the RSX anytime soon. So as I say, as you can hear from everything I've said today, is I'm worried about the market, but I also know that we will see plenty of bounces along the way, because Putin will play that game. He'll say, oh, we're going to do peace talks now, and things will, and then he'll hammer again. We just need to be careful about getting overly negative, overly fast. But on this whole thing about inflation, if this thing somehow gets resolved in May, okay, that oil prices will come back down for the key summer driving season. That's great. But you know something? It's basically already too late for food. All those fertilizer prices, natural gas is a key ingredient to making fertilizers. People have to start planting now or soon. All right, those fertilizer prices are through the roof. Food prices are going to be much higher throughout the year. Unless this thing gets resolved in the next week or two, food prices are going to be high all year long. People get mad when their gasoline prices are high, but man, they start getting their torches and pitchforks out when food prices get really high, and that's then you got more chaos and stuff like that. So a lot of reasons to be concerned out there. But when I'm going to be watching, I'm going to be watching gas as much as I've been watching gas. I'm going to be watching those food prices over the next 6 to 8 months.
Interesting stuff. And I mean, you do chop this all up in the chat room where you're live trading all day. So that's pretty much where you're posting your picks, right? Entries, exits for whatever you're trading. I showed everybody a little bit of the chat room earlier. We'll go. I'll stick around and show some later. But definitely let's hit some tickers, Matt. I've just been getting bombarded with emails about like how to join your live trading room. So I'm gonna drop the link in the chat, guys. If you guys want to join Matt, we're trading pretty much all day, buying calls, buying puts, very simple stuff. You're not limited to that. You can ask Matt a question about other types of trade ideas, other types of setups, that kind of stuff. And
people, I had people last week saying, hey, I own this specific stock. I've owned it, and what do you think? Should I, I'll give my opinion on the stock. And it's like, what should you do it longer term, short term, whatever. And again, so there's sometimes where I don't know the company well enough, or I have a neutral opinion. I'll be honest with you. I mean, some people, they feel like they've got to give an opinion about something. It's like you listen to a sports announcement, and sometimes they've got to comment on every little move on the playing field. Sometimes there's really you don't really need to, and nor should you. And if I don't have a compelling thing to say, I'll be honest and just say, this is. I have no opinion right now, and whatever. But usually there's something. At least I can at least give you an idea of what the potential is, and give you a few ifs. If this happens, this will be that type of thing.
Yeah, I mean, I'll tell you something, man. Like when I started trading, like kind of around like by that COVID time, there was just one theme in the markets, right? It was just COVID theme. But now it's like COVID is kind of on the back seat, right? You have this whole Russia possible war, right, with Russia, which is a pretty big deal. And you have inflation at record levels, and rates, and so that's the talk of the market. But there's just so many themes happening right now. They all impact each other. It's just I don't see myself really jumping into this market by myself unless I do it with a tight community or somebody that I can like legit trust that has experience, because it just seems like this is that time where you need that mentorship. Especially when we don't know what can happen, right? Things can change very quickly.
No question. So yeah, so if you want to talk about some specific stocks, just throw some. I'm going to talk about Tesla now, but throw some tickers or whatever that you'd like to hear from me, and I'll give you my opinion on what they look like, and what I know about them fundamentally and how they look in the charts.
Right.
And so while you guys are doing that, I'll just talk about Tesla here.
Just
And-
a quick question though, before we do get into Tesla, because I know you're super passionate about Tesla. What do you have you heard the word stagflation in the markets being discussed? Is that like a legit thing, or you think that's like something too crazy?
No, I think it's very legit. I mean, and of course, the higher that these inflation issues, like I said, food and especially energy prices, but it was across the board. Prices were already going up anyway, and so what happened? When you exacerbate it again, when the situation is demand, it's okay. Remember, I talked about the oil price thing, and when I talked about the jet fuel price thing. But it's the same thing. When oil prices are going up because demand is good, if commodity prices are going up because demand is good, that's not bad. That's not bad. That's not bearish, because the demand is driving it higher. That means more people are being employed, more people are employed, more people are going to be employed, people are getting paid better so they can pay higher prices. That's good. It's demand driven. And that's what we usually have. We had in the 1970s, and what we're seeing now is when it is supply driven. In the 1970s, it was the oil embargo that causes supply to shrink. Okay, now, so then you shift it from being, not only is it supply driven that prices go up, the prices go up so much that it causes, gives people less money to buy. People aren't, they don't want to pay higher prices, so they stop buying things that they don't need. Okay, and because they have to pay more for what they do need, food, fill up their gas tank, things like that. So it has a double whammy. It's when prices go up because of supply, it actually has an impact, a negative impact on growth. So I guess my way of saying it is that demand-driven inflation is bullish. Supply-driven inflation is quite bearish, and it causes stagflation. Stagflation being higher prices, lower demand. There are some people who think that this inflation will get so much that it'll actually turn back down to deflation. That may happen, but that's not a positive scenario either. But stagflation is a real issue, and again, the reason for that is because this inflationary time frame is taking place because of the change in the supply equation. At first, it was all those supply chain issues. Now it's obviously what's going on in Eastern Europe, because it's not just energy, and it's not just wheat prices, it's not just corn prices, it's fertilizer prices, because natural gas is very important. I've talked to some commodities traders. It's literally, they're paying in some cases 5 or 6 times the level they would normally buy for these fertilizer ingredients, and it's like they have to raise prices, or they're going to grow fewer crops. And if they grow fewer crops, again, that hurts the supply. The supply prices go up. Either way, it's not a good situation. So the thing out of Eastern Europe is not just oil. It's also natural gas, which is also fertilizers, which is also wheat, which is also made in so many different foods. It's a lot of different things taking place, exacerbating a problem that was already a big one.
Right, right, absolutely. So, but yeah, let's dig into Tesla, and let's get some tickers there from the chat. But let's go ahead and rip Tesla and go over Bitcoin as well. I don't think we.
Yeah, I mean, this one, I've got some real good calls on this. I mean, again, back here, let's see how overbought it got. Its RSI chart. I mean, and it's a great company. A couple of people in the chat thought I was out of my mind to say it could go down, and it really surprised me, because I'm like, wait a minute, if you've been following the stock for a long time, you know that it can go down a lot. It has many, many times. Why do you think it changed? I mean, it doesn't mean it can't go a lot higher over time. And I was not saying the stock couldn't go to 2,000, 5,000, whatever. But I just saw this RSI chart was ridiculously overbought. Had to come down. And sure enough, and I even at times said it could go below 1,000. People thought I was nuts. And I said, could even drop to its 200-day moving average. They thought I was really nuts. Well, it did that, and it actually fell below the 200-day. Now it's sitting right on that. What I'm looking at this site now in this stock is we're going to do, my father's from my 92-year-old father who grew up in Missouri, the Show Me State. Great, the St. Louis, Missouri, great city. But see how it's got up just below 900, so $890, basically every single day last week. I'm sorry, every single day last week except for Friday. And it was funny. I saw an article this week talking about how Tesla's doing so well. How could you say that's doing well? Well, it is definitely doing better than some of these other EV stocks because this is the crown jewel, obviously. But what we're looking at right now, so if it can break above that 900 level, the 890 level, that's going to be bullish. Again, give it a key higher high on a very short-term basis. It'll also take it below. I'm sorry, it's already trying to break above this trend line. The trend line, again, going back to basically the beginning of the year. See this is, it's setting up pretty well. That's why I look. It's like it came down every single day of the last 4 days. It tested that old trend line. We know that old trend line. Okay, that was resistance. See, it got up to it. Now that old resistance is now new support. It's been holding that line, so that's good. So if it can continue to hold that line and then make a nice higher high, that will give it a higher low and a higher high, which would be a big change from what we saw here, and it's going to be bullish for the stock. If, however, we break more below that 200-day moving average and break below that trend line once again, so I'm really looking at kind of last Friday's low, intraday lows, which was 825. Again, I don't know it's going to be a disaster, but it's not going to be particularly good for the stock. I think the stock has held up very, very well in the last couple of weeks compared to, again, like everything did get clobbered back in here when last Thursday when they first attacked. But other than that, it's actually held up pretty well. And right now, it looks like it has a decent chance, but because I'm concerned about the overall market. But there's those two levels. You go above 890, that's going to be very bullish. You get below 825, that's going to be bearish. And I just want to look at one other thing here while we're talking. Remember, we talked about the MACD chart. MACD chart. See it trying to break up too, but it's we're not getting a confirmed thing. So we're not really getting much signal from that. But those are the two levels. Watch those. Let the stock. Why make a bet now because especially if it breaks out to the upside, you're going to miss a little bit here. This stock's going to go to 1,000. So you're going to do very well. You can buy, the $925 calls if it breaks, especially because above 900, you can go out in a week or two. You're going to make some nice money there. If it breaks below that, breaks back below 825, it's going to be a problem. Again, not as big a problem. Again, it'll be more bullish than it'll be bearish if it breaks out versus breaking down. But again, because the overall market is so much uncertainty, we need to be careful on both sides.
All right, great. Good take there with Tesla. All right, let's go ahead and get some tickers here from the chat. Let me see what if anybody has posted a couple tickers. So we got Tammy Cleland from the YouTube chat. What's up? Asking for a TTWO. I think this is Twilio.
What was the symbol?
TTWO. I think this is Twilio though. I think that's what the ticker was.
Okay. Take two, or is that take two or TTW?
Yeah, TTWO. That's the symbol.
Okay.
Yeah.
Yeah. Okay, good. I just want to make sure what the so it's interesting because here's a stock, and you see the RSI is somewhat neutral. A series of lower highs, that's not good. But it looks like it's trying to make a higher low. So we're trying to form a little bit of a symmetrical triangle pattern. Let's go back a little bit further. Okay, boom, boom, boom. I really like the fact that it did go a little bit below that low. Let's get below its September lows, but not enough to me. Okay, this is okay. Oh gosh, let's see. I'm going to look at it. Hold on one second. I'm going to look at it on a closing basis only. That could give us this might give us a really good look at this one. Hold on one second. Apologize for that. Okay, so this is what we have here is we have a descending triangle pattern. Now, just because it's called a descending triangle pattern doesn't mean, see how there? Doesn't mean it's going to go down. It can easily break out to the upside. But hold on, bang. There we go. So that's, a descending triangle. Remember, the symmetrical triangle has even, the one, it's like a wedge. I mean, it's like a sideways wedge or sideways triangle. This one is, you got the bottom line is flat and the upper line is declining. Of course, an ascending triangle is just the opposite. The top line, it would be flat, and the bottom line would be going up. That would be an ascending triangle. So what we're looking up for right here is if it breaks below this level, and we're still well above that level, so it's not a big deal. You break below 145, and we're 13, 14 points away above that level. That's going to be a big problem. It's close. If it could turn back up here and break now again, right now next week. So we're looking at about 168. You break above that, that's going to be bullish for the stock. But right now, it's kind of in the middle of it. It's on an intermediate term basis, it's not overly compelling to make a big bet. This is one I would say, hey, I want to, especially if I'm just buying the stock, I'm not looking at the short-term options. I would say I'm just going to be neutral in the name. Now, what we're seeing here is that it did see a negative cross there. And so that's not good. You see what happened with the negative cross there? Negative cross. Boy, that does have me concerned. But it is trying to show. Let me get all these moving averages in there. It gets a little messy. Let's take some of those out of there. But again, and this is exactly what we talk about all day long. Bang, dang. There we go. So the one thing that does give it a little bit, make me feel, but again, it's really kind of, see, it's true. This looks a little, God, the more I look at it, the more I realize it's a little dicey here. I do like the fact that it's trying to make a higher low here, but boy, this stock has to bounce immediately, or this MACD chart's going to get a little bit more to the downside, and it's probably going to go down and test that 140, 145 level that we were talking about. So the stock starting is a little dicey. Longer term, hold on a second. Longer term, you just see how this nice rally here, and it's this is not great, but it's just the type of situation where it's taking a breather, and which on a long-term basis, if they get their act together on the fundamental side of things, it can go a lot higher. But right now, I'm a little bit cautious on the stock for again, the bottom just about breaking down below that. The symmetrical triangle pattern on a closing basis, it's not a dire situation, because on an intermediate term basis, it's say short-term basis, it's a symmetrical triangle. On an intermediate term basis, it's a descending triangle pattern. Not worried about the descending triangle pattern, but I'm worried about the symmetrical one nearer term. And when you combine that with the MACD chart, it looks like the stock probably wants to go a little bit lower here near term.
Okay, all right. And let's see what other kind of tickers we got here. Let me just pull up the chat here. We already went through Tesla. So let's see, Richard's talking about Tellurian. So, I mean, I actually know a little bit about this company. The CEO seems to be quite connected. He was the CEO of like this other big company that he took it, to the moon. And, but he's got some contract. What do you know about Tellurian? Is it a stock that is talked about there among?
What's the symbol? We haven't talked about that. What's the symbol on it?
TELL. It's a natural gas company.
Oh, okay. I'm sorry. I was. Well, okay. Now, I'm just looking at a second. Let's see. No dividend. Well, LNG. Boy, that's it's there's a lot of potential in LNG. LNG is liquefied natural gas, and we have that in Boston. Boston, we have a big terminal there. I think there's only 2 terminals in the U.S. But geez, the reason why I've been kind of hamming and hawing here is like I'm surprised it's not doing better, given the move in natural gas. But
yeah, so like this company. Basically, they've been the CEO has been trying to get contracts. They do have some really solid contracts built up, but basically it's on a plant that is being built in Louisiana. So I guess it's based on the future of it right now.
Well, again, we have the thing about here. It's just the opposite. Now I have to admit, I have an older brother who is involved in the energy business. in that kind of thing, and in some of these areas, and so I'm a little biased, but I do agree with what he says on it. I just think that, again, going back to fossil fuels and LNG and other things, it's like we have to have a bridge between now and when we get to fully away from fossil fuels. And these are one of the type of things that I think will do very, very well. So I am biased to the bullish side on this. I'm sure there's some people who are very anti-fossil fuels that would not like what I'm saying, but I totally believe that we need to move away from it. But I'm just realistic, and I know it's not going to happen anytime soon. So here we have another descending triangle. However, this one is way closer to the top end of its triangle pattern. So it looks like it wants to break out. Why didn't it break out here? Because it got overbought. So this is has a lot of good potential because it needed to pull back. This is what we wanted to see. We want to see it. But the thing is, the last couple of times it became very overbought, it got crushed, right? So let's see this one. Let's see if it can bottom out in here this time instead of getting crushed, and then make a very nice higher low and then break out. We do that, this stock's gonna be really good. So I don't think we're quite there yet, but this is one that could have a real lot of upside potential. And what we want to look at right now, and I'll show you here. Okay, again, it's always great to use a couple of different. I gotta write this one down. This one's got a lot of potential here. That's why I'm gonna ask my brother about that one. Okay, oops, that's not what I'm. So you can. I meant to put up the MACD chart. Hold on. Okay, now it hasn't rolled over, so that would be. There's another thing that I've been looking for. It's like it's not, even though it's rolled over a little bit, it has not had even close to a negative MACD cross. So it can come down a little bit here and move back up. This is, oh boy, this stock could really have a lot of potential. So again, can it come back down, test its 200-day moving average, which is the purple line there? Again, I'm sorry I have so many. For me, it's not a big deal because I'm used to looking at them. But I know when you see that many lines in the chart, it gets too busy to really follow. But you see the 200-day moving average. See, that was tough resistance. It broke above it. Now it's going to act as support. Boy, it'd be really nice if you could just get down here at about the 340 level, 350 level, hold it, and then break it. If you get anywhere in here, a higher low followed by a higher high, that's going to be extraordinarily bullish on the technical side of things. On the fundamental side of things, there's a lot of talk about LNG and what we need to do there. It's New Orleans and Boston, the only places where they have it. It's one of those things that we need to use to get us to where we want to be down the road. And but it's going to take a lot of time. I mean, I guess my point is, on a fundamental basis, people are talking about will all this stuff going on in Russia and Ukraine, will that accelerate us moving to a more natural green energy? Yes, but it's still impossible for us to get there as quickly as we would all like. So these other bridges are going to get out. Not that liquid LNG is it is a bridge, but it's not new technology like some others, methane and things that they use. But this is one that can help us because there's more of it. We can use it, and the one thing is it's dangerous. I mean, they whenever an LNG tanker comes into Boston, they go right by the airport, and the airport shuts down for whatever it is, 20 minutes. No planes can land because if it ever hit one of those LNG tankers, they're not really sure what it would do, but it would not be good. But anyway, so that's my feeling on that. I'm not quite there yet, but boy, that looks like it's got a real lot of nice upside potential if it can bounce back above those highs from last week anytime it can happen in the next few days for that matter. And I wrote that one down. We're going to be talking about that one on the chat room tomorrow and going forward.
Yeah. Do you really see oil just ripping high? Do you think oil can go to 200?
it could, but it's going to have to get things are really going to have to get that, really dicey for that to happen. But you don't need that for LNG to go higher, I guess is my point.
Yeah, there's a weird correlation there. Is there an actual correlation there between the natural gas and oil?
There is, but there's definitely, especially during times of stress, there's no question. But it's odd how often they diverge from time. They do diverge from time to time. It's kind of a weird. I mean, I can just show you here. Hold on. Let's go. CL1 commodity GP. Oops. GPM. And this is a chart comparing natural gas, which is the blue line. Now, can you see the blue line okay? I can put a different color on it to make it easier to see, but I'll make it a different color. Hold on. Oops. Make it a little bit easier to see here. Okay. Whoops. Whoa, 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 whoa. Okay. Let me go back a little bit further. I'll just go back 5 or 6 years. See how, you see how it's very correlated there, but then suddenly there's a big, every once in a while there's a big move out of joint. So yes, they're usually correlated, but sometimes there's some extenuating circumstances that takes them, creates a huge divergence for a period of time. As you can see, so it's not just for a few days. Sometimes it can last for several months.
Yeah, and whenever oil hit like -37 around there, people were saying like that people were like literally giving you oil for free. I don't think that's the case though, but like, would you be able, like, what happens if you try to buy oil at -37 in the actual platform? Did it let you buy it, or what happened?
It was funny in the futures, but I think the only place you could really buy it was in the futures market. And I don't trade the futures. Actually, it's funny you mentioned that, is that somebody asked me about last week about wheat. And I said, well, I've never traded wheat, but it looks like it's going a lot higher. And he went in and bought it and did very, very well. But in the futures market, yeah, I mean, it was like you came in and they had to pay you, which was, the whole thing was convoluted. It was funny because I did talk to my brother about it at the time. And it was just like the risks were too rich for my blood. So I wasn't bold enough to make any kind of a bet when it was trading below zero. But that was definitely a time that's beyond unique.
Was that buyable? Were you actually able to buy it if you wanted to, or it didn't let you buy it?
Again, you could buy it in the futures markets, yes.
But it's -37. So how would you buy? Would they give you?
Well,
money?
I'm saying that I don't know. I can honestly don't know how the whole thing worked.
Yeah, that was just a crazy time. And now you're looking at oil rip, like totally to the other side. So is oil the trade of 2022, you think?
Well, it's like I said earlier, it's getting incredibly overbought on a near-term basis. I'm going to go back to that thing. So I am not chasing it here. That doesn't mean it cannot go a lot higher. I mean, believe me, if we have a big problem, this next week, and whether and there's this thing deteriorates in a significant way, crude oil could skyrocket to $150. I show this. I'm just going to pull this one back up that I showed earlier. Get rid of a few things here, but get rid of that again. Now I'm going to pull up the weekly chart. This is the daily chart. I'm going to switch to weekly. Okay, takes a second, but this is very, very overbought. Okay. And you look at the Bollinger Bands chart, which again tells you standard deviation. When it gets to more than 2 standard deviations away from now my thing's freezing up. Standard deviations above or below its 20-day moving average, it just gets really, really extreme, and it's just not. I just can't feel strong enough about the geopolitical, because if the geopolitical situation gets even slightly better, oil is going to get crushed near term. Can it go to 150? I think there's a very good chance it could go to 150. I just think that it's just, this is, and again, I mentioned earlier too, the futures traders, 96% bullishness. You very rarely see anything get the 96%. There's too many people on the bullish side of the boat in crude oil. So again, this is the chart I had up earlier. Let's just pull it up here. You see the Bollinger Bands chart, very, very extended. Let me go here. Very, very extended. It's only been this extended one other time was 22 years ago. This has only been, the RSI has only been this extended 2 other times, 2007 and 1999. So could it go a lot higher? I just think that right now I own some puts in Chevron that expire next week, the $152.50 puts, 152.50, March 11th puts, because it's not a lot of money because it's kind of a bit of a lottery ticket, but the odds are that oil prices will hold up. If oil prices come down, Chevron's going to drop to $140. That'll still give it a huge rally in the last 12 to 18 months, but it is really, really, really overbought. So yes, I think it could go to 150 easily. 200, bit of a stretch, but I do not want to be making that bet on a short-term basis at this moment.
Okay, and we have been talking about the whole implications of, the whole gas, oil stuff with Russia, Ukraine. We haven't really discussed much about the possible Taiwan situation, right? Semiconductor situation. What are your, do you think that's a possibility? You think it can happen? Or?
Yeah, it's funny. Again, I'm not a geopolitical expert, but I spent a lot of time in the last couple of weeks reading this stuff, and I've been reading it on and reading to and listening to people on Taiwan for a couple of years. The one thing is that Taiwan seems very, very adamant about defending their island, and then they've got to be looking at what's going on in Ukraine, saying, I think the people of Taiwan are even more adamant about defending their country than Ukraine is. So we really got to be. It's got to be a significant battle for us to do this. And a lot of people saying this is a test case. Could it happen soon? My bet is no, because of how well Ukraine is doing. Because even if China, they feel that they deserve to take it over, and it's part of China. But a lot of people around the globe, most people around the globe, believe that they deserve to be their own independent country. And what will the sanctions be from the rest of the world? What can they be? A lot of people say, well, if there's certain things we can't give too many sanctions on Russian oil. Well, there's a lot of things that would be in big trouble. Cause problems with supplies. We get so much from China. But at the same time, this guy Z is not a dumb guy. He sees what's going on. He sees the sanctions that are on there. He realizes what he's doing, because what he's doing, he's clamping down a lot of different industries. Their economy's slowing, and they think very long term. So I would think that if they're going to go into Taiwan, it's not going to be now. It's going to be later. So I'm not as worried about as other. But like I said, anything is possible. If that happens, boy, the market's going to crash. Market would crash. The market would go down 20-25% in just a couple of days.
Yeah, I mean, it is a possibility, right?
It's it's just definitely a possibility. Definitely a possibility. Maybe and sometimes the biggest things you have to avoid as a trader or investor is relying on hope. Maybe I'm relying too much on hope because I just don't want to see that happen. But it's also, from everything I read, it's something they're going to do at some point. Some point they are going to make a move on Taiwan. And I just think that what's going on in Ukraine may keep them from doing it now. But like you said, it's certainly possible. And I'm not saying anything's possible. I'm saying, no, it's possible. I mean, it's possible. I'm thinking it won't happen, but it's definitely possible.
It's like this year is the year of like just things going south. It's like we've been dealing with the aftermath of recovery of COVID for some time, right? And the globe is dealing with inflation. It's not just the US. So, we're getting slammed with inflation from other stuff when we buy stuff from outside and then tacked on again here. So it just seems like this is the year where you definitely want to be careful. You want to know what you're doing in these markets because there's a lot of headwinds and tailwinds on both sides, I think.
No question. Absolutely no question. It's not a year to be guessing. And it was easy. It was pretty easy last year when you bought a stock and it would go up a lot quickly, and that's all you had to do. You didn't have to know much more. What was going up? Did they have some short interest going up? Some of these chat rooms that have 20,000 people on it, and people can start a rumor and shoot the thing higher. On our concise chat room, we don't dwell on those issues. We tell them what's really going on, and it's harder, but it's also not as many people. It's harder means fewer people are doing it, and when fewer people are doing it, it actually can be a lot more profitable, because when you're a good contrarian, a contrarian who catches the masses on the wrong side, then the masses have to completely shift. You make big profits.
Yeah, it's I mean, and the thing is that like you have to be able to time it, but it's really hard to actually do it. But you've been doing this for 40 years, so obviously, you kind of know these markets in and out, and that's definitely a blessing. I hear from the feedback and all the stuff here from the folks. But yeah, this has been a great session, Matt. Do you have any closing remarks on your end, not just on the markets, what you will be doing in the live trading room with the members, and why the folks here should take a chance here on the actual live trading and trade with us here?
Yeah, I think this is again, it's a unique opportunity. It was funny because with the Fed changing its policy, I really thought this was going to create an unbelievable opportunity for an increase in volatility, which it did. But now we've got thrown in this whole situation in Ukraine. It's even more so, and God forbid it, and we see Taiwan that could even on top of it. So a lot of people are going to have a very tough time if they're just trying to guess. And we're working really hard to make sure people are making educated decisions. Even in that situation, every great trader in history, the greatest hedge fund managers of history, have had losing trades. But the point is, they have great batting averages, and they've made a lot more money in their winning trades than they lost in their losing trades. And that's what we've been able to do so far here, and we want to continue to do that. But the key is we have the tools. We didn't have those as individual traders in the past. We have those this time with the weekly options, with the 3 times a week options, and the index ETFs, with the ETFs, the inverse ETFs, leveraged ETFs, et cetera. We have the ability to do it. And of course, with the situation now too, where you're doing your trades electronically, you can get, you can execute things quickly, move on to the next thing, and be able to do it in both directions, even in one day. In the old days, you may not get a report back from your broker for 10, 15 minutes. And you don't know where the heck you stand. Well, how do you reverse the trade if you want to, if you can do that? So it's the time is right. It's kind of like last year, people thought, it was kind of the perfect time for investors to come in, individual investors to really do it. And it was good. This is an even better time. It's going to be a better time for fewer people because most of them don't, they just did the easy trade last year, follow the crowd. This way, the money's going to be made going against the crowd, and when they have to make their big shift from one side to the other, and we're set up on that side, that especially in options, we can really make that much better money, and it's been working so very well recently. I hope you stay on and listen to Rodrigo's. He's got several things to really kind of pull it all together for you here, but it's worked out really well. And I think you've said quite a few testimonials from the people on the chat room. It's not just a place to get ideas. It's a place to banter back and forth your own ideas. It's learn a lot, and it's a really exciting time in the market. And again, I'm just going back to, let's embrace the situation, not be afraid of it. Those who are afraid of it are not going to do well. Those who embrace it are going to do very, very, very well. So I hope you join us for as we go through this process through the rest of the year. Thanks again for everything on a Sunday afternoon. But I do really think that the next week, it's funny. Every week I say, boy, this week's going to be a really key week. Well, this week's going to be, so is the next few weeks. But we're going to be moving and shaking in the markets. We're going to be playing both sides here and there. And right now, though, we're going to be kind of thinking the markets move slower over time, but taking advantage of the situations when they come out on the positive side. Good luck to you. Thanks again for coming, and stay on for listen so Rodrigo can kind of review everything and give you an idea of really what we do here. The whole idea is to help people make money and trade in an intelligent fashion. And thanks again. Have a great weekend, and we'll see. Hopefully, we'll see a lot of you on the chat next week.
Shout out to Matt Maley, Chief Market Strategist of Miller Tabak. Thanks a lot, man. Great having you here, Matt. So I'll see you in the chat room.
Sounds great. Yeah. Thanks, Rodrigo. Talk to you soon.
All right, man. I'll definitely see you there. And all right, guys. And if you do have any questions, feel free to just put them in the chat or email the contact that we're putting in the chat. This is what I'm showing you right now. This is the chat room. This is the public chat. So let's say there's two different chats here, right? So you have Matt's important messages, which is where he's adding, selling puts. As you can see, this is a full-on newsletter here. What you're getting here, you got a whole, Bible paragraph there. So if this is a full, pretty much like not just education, but like what's happening in the markets, right? So just a quick, let's just see what he's talking about here. As I studied situation in Ukraine last night, I listened to and read the comments from several different geopolitical experts. There's a strong feeling that Putin is going to have a tough time surviving this crisis as the head of Russia. So yeah, I mean, this is all actionable trade ideas and really knowing what is happening, right? As you can see, he's also touching here on the China stuff there too. US monetary policy. These things matter, guys. I mean, it's, whenever, like back in the day when I used to hear like some people like, oh yeah, I don't care about rates. Like I just want stock picks. It's just like, that is so toppy, it's like the feeling of the top when you get to that, but this is why it's important to know this stuff and understand it. And Matt does give you a full breakdown. And on top of that, you're making money with him when he's buying calls or buying puts. So you can see here, he's adding or selling puts on the QQQs there. And let's just see the most recent comments here. Let's see. And then you have the other chat, right? So in the chat I just showed you, only Matt can post. That way everything's organized. You don't have to, scroll around to try to find the stuff. It's all there, right? Pretty straightforward. Entries, exits. And then you have the other chat room where everybody's talking, the whole crew. And let's see what Carlson the Flyer, shout out to Carlson, started with a small 10K account and more than doubled it since January 11th. That's definitely nice. That's a good experience that you had that. So obviously, not everybody, I don't know if everybody has the same results as Carlson or better. I don't know. But this is pretty much like pretty typical. You can see here. Yep, and there is, yeah, correct. There is a session on Tuesdays at 11:30 a.m. Eastern. Yes, and it's only for the chat members. You're gonna get trade ideas there. You're gonna get setups. So if you want a meeting with the chief market strategist, Matt Maley, at least once a week, right, where he can give you trade ideas, setups, and follow-ups, adjusting the portfolio and all that stuff, that's a great place to do it. Carlson is definitely banking. So if you join the chat, I would definitely talk to Carlson. Mimi Lowell, shout out, she just joined here. I think it was a day or two ago. So shout out to her, new family member there. But yeah, Carlson is buying drinks from what I'm understanding here. So it looks like he had a great time in the chat. But guys, like this is really like if you join the chat room, you'll see what it is. There's a 7-day money back guarantee. That's correct. So if you do want to try it out, you can join for the 7 days, take it out for a spin and drive it out, see if it fits you. It really comes down at the end of the day, to making money in this market, right? That's really what it all comes down to, guys. Is there more money in your account or not? Is your P&L green or not? And do you want it to be, in a much better place? That's what it all comes down to with Matt, right? So he's been doing this for 40 years. I can promise you, you're not going to be able to find that kind of experience out there for something like this, like 1,300 for the year comes out to like maybe 100 a month, something like that. But having a chief market strategist at your literally fingertips there. And it's not like this group is blown up or anything. It's not like a pump and dump chat room like most of these other spots. You'll see, this is not like we have 10,000 people here, not even close or anything like that. So and you also get these proprietary scanners here that we've built in for you guys. So as you can see, LAIX, I don't know what that is. It's up 934%. Let's see what this is. Damn, 50 cents, from 50 cents to like $5. I don't know what this is, to be honest, but this is a great place where you can start picking, right? Some trade ideas, right? See what you recognize, what you don't. Houston American Energy, HUSA. Oh yeah, I remember this one. I remember when oil was hot, like a year, 2 years ago, when it was like the trade. And now I'm remembering of all these oil stocks. But this seems to be a trade, really. I don't know. This is, I mean, clear. I don't think this is a long-term thing, but this is definitely a trade thing. So Houston American Energy. This is obviously some sort of oil company. Damn, it's ripping higher. Okay, so there's definitely a lot more volume there. Let's see. Let's check out another one. This is another one I know. Wow. Yep. Higher as well. So it looks like oil is the trade to be making. Until when? Who knows? But I would definitely check in with Matt. Who knows how high these things can go? Imperial Petroleum, Vion, 39 cents. What is that? Let's see this. All right, so it doesn't look that bad. This is oil. Communications. No, it's not oil. Let's see what else we can find in this scanner. B cell. What is that? This has to be some biotech. Yeah, this is biotech. Indo. Let's see what Indo is. Indonesian Energy Corp. It's probably ripping higher. Yep. Damn. $4 to 40. There are definitely opportunities out there. There's definitely. Oh, LAIX reverse split, Rich. Damn. Yeah. No wonder. Okay. Um, there's definitely some opportunities out there in the market. That's really the main thing. Like you can use this scanner and just like chop it down there with Matt, like talking about all this stuff. This is crazy, man. Like, for people that say that, everything's going down, like there's always bull markets out there. Let's see, $5 in February. Literally in February 17th, this was $5. Wow. I wonder if this has options. Tammy, yeah, there is a free laptop. That's correct. The free laptop is only for the people that joined today, Matt's live trading room. So yeah, you can join. It's a free Google Chromebook. It's yours. You don't have to return it or nothing like that. So yeah, everybody gets it for free if you join. And you also get a special prize. So if you do join, go ahead and make sure you email me because we are adding a special prize for everybody that joins here. Let's see what this other one is. MXK, Mexico Energy. Damn, everything energy is ripping. Wow. Yeah, this is where you have to be. I'm telling you, this scanner is amazing. It just shows you like the best things out there right now. Let's see. These are some really good trade ideas. I mean, it's a good place to start. You can see barely any volume, right? And then you just see like this massive algo buy. Who knows what that is? Let's see. Technology service. IMPP, Imperial Petroleum. It's probably ripping higher. Yep. Wow. Let's look at this other one. Nova Vision. acquisition, NOVVR. What is this? 30 cents. Not sure what that is. Let's look at nine. Nine is another oil company, I think. Ripping higher. Yep. Yeah, looks like oil is the spot to be. Tammy, yeah, we just added the computer as a courtesy. So you can, yeah, it's just like a courtesy item to show that we love everybody here. Nine, yeah, it looks like everything oil is just ripping higher. Let's see what else here. Let's look at Nat, this other company. This is like an oil tanker. I wonder if the oil tankers are ripping too. Damn, they're gonna start ripping. Oh, I remember this one. I don't know if anybody remembers this company, Nat, but this it went on Jim Cramer show and it literally like at $8, $9, and then from there it's been tanking. But with oil reversing, this could be an interesting play. Definitely something I would talk with Matt, of course. Like, this is where you find trade ideas, things like that. But this is like an oil tanker. I don't know why. I don't know really the reason why this is going up. Everything else, oil is going up, but this company, I think, used to have a dividend. I don't know if they still have it, but the CEO has a huge buyback program. But yeah, you can find some really interesting trade ideas here, guys. In the CEI, yep, Camber Energy, you know it. We all know that one. Yep. It might be time to get into Camber. Who knows? I remember when the Zach guy tweeted the stuff. We went all the way to $5, and I mean, with oil going higher, this really is obviously something that you can trade, maybe scalp. But I would definitely ask Matt, guys. So I just wanted to show you a quick look of this scanner, how you can use it. You can find really interesting trade ideas, not just on the bullish side, right? But you can also find on the bearish side. So let's look at this. Front yard residential down 99%, 99.8%. What? Probably some Chinese company, maybe, who knows? No idea. XDNA. Yeah, you definitely have. I mean, if you do short, if you do like to find companies to short, this losers tab could be a good place to maybe to get started finding some trade ideas, guys. But yeah, you can use this on both ways, on the bullish or the bearish side. It doesn't matter. You can use this to pretty much to find. Yeah, Tommy, it's like a perk. The laptop is a perk. These things are perks too that you're getting here. This proprietary scanner is a perk. This charting system that you get as well, it is included. And we're also, just so you guys know, we also have a session on Sundays, and every Sunday, not on Sundays, on Tuesdays, and on Tuesdays 11:30 a.m. Eastern, Matt will talk about the markets, give you guys trade ideas. Many of you guys already have seen him like on Bloomberg TV or Yahoo Finance, CNBC, all that stuff. But that's the meeting that we have for the chat members is basically, like a gathering to find trade ideas and setups and things like that. So let's just see what I think you guys already know Carlson. He's quite the popular guy here in the chat. He started with a small 10K account and more than doubled it since January 1st. So join Carlson, all right? Join Matt, join me in the chat room. You're gonna love it. Trust me, it's a fun time. We always talk about what's going on in the markets. We have fun, we know really that if the markets do go down, we don't just sit on the sidelines, right? We're there pretty much to be able to profit from the volatility, guys. So I posted the contact in the chat. If anybody does have questions, reach out. More than happy here to hook you up, guys, and get you set up here. Everybody that joins today, you will get a special prize. You have to make sure to email me once you join so that I can go ahead and activate that for you. Thanks a lot, guys, for being here with us. Appreciate the love here. Appreciate you guys being here with us today. So if you want to hear more about Matt, join the chat room. We're there all day. And if you have questions, reach out. Rainier I tried to join, but it says it's removed. Let me check here really quick, Rainier. 1 second. Let's take a look here. Yeah, shout out to Rainier. Rainier's the newest, one of the newest here, family members. So shout out. Good stuff, Rainier. Welcome to the family here, my friend. Once you join there, you should be getting some welcome emails. You will be getting an email as well to fill out a form, which is you just got to put the address where you want the laptop to be shipped to. So just know that, guys. Yes, you are getting the laptop, and on top of that, I'm hooking you up with a prize. You have to email me though when you join, otherwise you don't get the prize. So Rainier, welcome my brother to the family. We love having you here. Make sure you pop in the chat room ASAP because the chat room's open right now. And it doesn't close. It's pretty much opening. It's open all day. Tammy, thank you. I'll be joining as soon as I possibly can. We'll be waiting for you, Tammy. Shout out for our future family member here, Tammy. And guys, if you have questions, just reach out in the chat. No worries. We're closed today, but I still answer and I still work. So I can still, talk with you guys if you have questions today for a bit. Enjoy your weekend. Stay safe, guys. Hope everything pans out there in Europe. Hope everybody's safe and things get to a better, like a more, a more sustainable environment there. JT, let me post the email there. 1 second. Yeah, guys, hope everything works out for everybody. Hope everybody has a great weekend. I'm going to post my email in the chat. Feel free to contact me if you have questions, not just about the chat room, but about how maybe this can fit into your strategy, right? And yeah, I mean, that's really what it is, right? If you want to go by and just try to get everything, and this is just my experience, if you try to do everything and get everything for free, you're going to end up paying a big price. So sometimes, hey, if you don't have 40 years in the markets, if you don't have 40 years being a director of trading at Merrill Lynch, a chief market strategist, if you don't have that kind of experience on your belt, then you just have to pretty much admit it and say, okay, let me get that help, right? So you can't buy experience. I mean, I guess this is the closest you could get to that, really, when you trade with Matt, but you can't really buy being 40 years in the market. You can't learn what someone has learned in 40 years being in the market. It's just not how life works. So join it, give it a shot. If you don't like it, 7-day money back guarantee. If you do like it and you like to make money, hey, stay with us. We love it too, right? So shout out to all you guys that came in early. Thanks for joining us, guys. I'll put the contact in the chat if you do want to reach out or have questions. JT, 1 sec. Let me post it there right now. All right, folks. Thanks for being here. I'm out. I have nothing else here, but I want to thank you guys for being here. And I'll see the rest of you guys in the chat. So shout out, and we'll see you guys next time. All right. I was gonna wrap it up here, but you guys just bombarded a couple questions. Yeah, how many trades does Matt do per week? He'll do about 1 to 4 trades per week, guys. So all right, I think that kind of wraps up all the questions. Rainier, shout out, man. I'll see you there in the chat. And guys, enjoy your weekend. See you guys next time.